Well, everyone, I want to welcome you all here. I know we've got some familiar individuals here who have been here before with some of our tape reading classes, and we've got a number of new individuals with us this morning. I did not open this up real broadly. I wanted to keep the size of this a little more manageable, and I wanted you guys who have been there with me for the 3 weeks on the tape reading to be able to make this as well. So for most of the participants that are in here today, you've got some familiarity with what my methodology is and my tape reading and so forth. We're going to go through some different facets, and so for some of you there will be a bit of a rehash, especially today. For others, though, because this will be the first exposure to what I do and what I teach, there will be some review. But we'll go through that as we get going here this morning. Like usual, for anyone who has worked with me, we are going to spend a moment on a disclaimer, and I especially want to do this because we've got some new clients and we've got a method of trading that for many individuals can be a dangerous method of trading. The futures contracts are large contracts, and because they are large contracts for most individuals, if they come in with a smaller account, they realize, hey, it's $500 margin. I can trade this because I've got a $2,000 account, $3,000 account. But they don't stop to think that that may be a 60 or 80 or $100,000 value to that contract, like a contract of crude or a contract of the S&P. And so as a result, they're kind of surprised at how quickly it can gobble up an account. But you've got to realize, that's the size of the positions that are being put on. So I always encourage clients to be very careful with this, to try to find ways to minimize the risk. There is going to be just a brief bit of information on how to try to do that while you're learning this, because scalping is something that if done correctly can make money, but if not done correctly, a guy can really churn the account. The commissions can really matter. So a couple other points from this, there will be some hypothetical things that we talk about through the course of the next 3 days. And if we don't take a live trade and we're talking about trades, everybody understands, of course, that's hypothetical, but we just want to make sure and state that right up front. And as well, both in the recorded video that's going to accompany this with actual trades and with the thought process, the things we analyze and call over the next 3 days, if you do decide to invest or take trades as a result of this, this needs to be your decision. We're not encouraging anyone to take any specific trade with us. We definitely say do not shadow trade if we start analyzing this. We're doing this at this point to teach the concepts. Just want to make sure that everybody's on the same page with that. The presentation here, I am doing something a little different with this presentation when we're through with it. And so I just want everyone to be aware that this is, the presentation is going to be copyrighted when it's complete. So far the materials are copyrighted and that we are reserving all rights to that. So I am asking that you do not record or distribute this, the event or the workshop. Now, while I ask that you don't record this, I do want to make it clear to everyone, and for you guys that have been with me in the prior workshops, I provide a recording at the end of each day of those sessions. Each person who's registered for this is going to receive a complete recording of all sessions that we go through. And when I do that recording, for you guys that have been with me before, you're aware of this. For you new participants, we do bookmark this to key points. Make sure you've got a copy of that you can go back and refer to in the future. And then in addition to the recording, as it mentions here, I realize that one of the key things in trying to learn this, I've had a lot of people say they have difficulty bridging the gap from understanding the theory, understanding our analysis as we analyze it live, but they really need to see the trades occurring to benefit from it. And so as a result, over the past few weeks, I have recorded a number of trades Those trades, you will receive a copy of that. In fact, I was working on that up until about 4 hours ago. I had it done, and I just went back in and was double checking that because I was going to distribute it today, and the sound was completely messed up. It slid a couple of key titles, and when those keyframes got messed up, it pushed all of the soundtrack wrong, and I had to go back through. I ended up spending about 6 hours last night trying to get that done. So I will be re-rendering that. I rendered a quick version of it. It is working correctly now. I will be re-rendering that and sending that out later tonight. Bill, your question as we go, you ask if I have a schedule for looking at different instruments this week. Not specifically. It's not so much looking at different instruments as it is looking at different methods. And I will be commenting on different instruments each day. In the video, in the recorded trades, the bulk of those trades, just for your guys' edification right now, the bulk of those trades were in crude. There's a full session for the NQ where I sat down and just traded a morning, recorded from one end to the other, 12 trades, 2-3 days that I did that with crude, and I did that on the S&P as well. That way you can kind of see straight through, and I felt that was better than just saying, here's my favorite winning trades of the past 2 years. It's actually just sitting down trading through a morning. Soon as the trade, I mean, you'll see when you watch this video, there's times when I'm planning the next trade while I'm still in a trade. And I'm saying, you know, like in the one case, I'm going to get stopped. I know I'm going to get stopped. If I get stopped, I'm going back in. This is what I'm going to do to it. And, you know, sure enough, I get stopped a minute later, go right back into the next trade. Another occasion where that occurred where I'm in the trade and it's like, look, if I hit my profit target, I'm going to go right back in when this happens. Hit my profit target, 30 seconds later, I'm in the next trade. So I tried to just go through that, and so you guys will have some real nice work to look at when everything is said and done. Now, I will talk more about this toward the end of the presentation as far as other instruments, and if you guys have input on other instruments you would like to see specifically, I'll be happy to take requests on that. But the stuff that we're usually looking at, or usually traders are concerned with, a lot of people doing the ES. We've got a lot of crude traders, a lot of guys that are interested in the 6E, the YM, the NQ. Really, the methods. What I want to show you today, and over the course of the next 2 days, is how to go in and find out for yourself how to apply this to any contract you want to trade. This is not something that is just specific to the S&P, but you're going to do it different on the S&P than you will on crude. So for that reason, if there's an instrument that we don't cover, you should still be able to put that together. Now, I will mention just on the crude, I know we've got some guys in here that are very interested in the crude, others that would not touch it with a 10-foot pole. The crude, one of the reasons that there are more trades with crude or more footage with crude right now is that realistically we're here in the summer doldrums. Market at times has not been the best market to trade. When you're trying to scalp and the market's moving very slow, those scalps are painful. So crude is active, jumpy, gives us something nice to illustrate. We've got stuff there showing how to do it in a slow market. It also shows us how to do it in a very fast market. So, you guys obviously got to read that on the questions. Just to comment about this up front, I don't want anyone having the wrong impressions about this. Normally, taking the live trades is a very gray area for an educator if that educator has awareness of what accounts, what people's accounts are like, or what their financial profile is. And because of mentorships with individuals, I do have knowledge of that. I try to be very cautious about taking live trades because it gets me into a very dangerous area with lawsuits with individuals who follow along and then say, well, you're acting like a CTA. And frankly, I'm not interested in that. I don't make money off of the education side of this enough to justify taking that kind of risk. This is something that I do because I enjoy working with people and I enjoy teaching. And so I will be analyzing live, but I will likely not be taking live trades during that, just so everyone's aware. Quick overview of this. I know that some of you guys that are here actually do not have a lot of interest in scalping. And while that is the title of this, the Scalpers Boot Camp, we're focusing on that. It is something that is also going to benefit intraday traders, the guys that are living off of the 2-minute, 3-minute, 5-minute chart. They're looking for a trade, trying to get 4, 5, 6 points on the S&P. This will still benefit you guys. And the reason for that is that the same exact method of entry that would get a guy in a scalp can be used to confirm your entries or keep you out of entries when you're getting ready to take your setup off your 5-minute chart. And you will actually see that in these recorded trades where in a number of these trades I said, look, this is the scalp. Here's the scalping method, but because of the bigger picture, I see a bigger target. And I want each of you guys to be able to do that, because at some point you can only scalp so much size. At some point, if you're going to continue to build wealth, you need to be able to take some larger trades here and there. And it's, you reach a limit on the scalps where it becomes dangerous. You can't come in and scalp 25, 30 lots of crude without having a 7-figure account. I mean, it becomes too dangerous. So this is something that I am going to show throughout the course of this, how to use this for a bigger picture. So even if you're starting out, you want to be a scalper, make some income, build your account up, gradually you'll be able to use these same methods with a little longer term trading setups. One of the things that I want to do in the course of this workshop is that I want to teach people how to trade. There's a big difference between trading a system which has been curve fit to a market and the market doesn't exist anymore. Now you're scrambling, you're trying to figure out how to make it work. This is not a system. This is discretionary trading. And so that's part of the goal here, is to help a person understand how they should approach the market, how you start at the top at the beginning of the day, how you think it through, how you adapt to the changes, to the curve that the market throws you that particular day. And so we're going to focus on that extensively as we go through this. Calvin, that's commissions and fees can get very spendy. Calvin mentioned he had a friend 56 trades the other day. A great deal of commissions on that. I used to run 80 to 90 trades a day, and because of the size or the quantity that I was trading, there were many months where my commissions were in excess of $40,000, and that was one of the reasons why I slowed down on the scalping. Is I looked at that and said, man, I'm buying a broker a new truck every month, and if I got a little bigger trade, I got a little more out of these trades, I wouldn't need near as many trades to make the same money. Wouldn't be spending it on commissions. I'd be putting more money in the bank. So at some point, boy, you can definitely rack some fees up. That's for sure. Moving along, one of the goals of this process is we want to go through here essentially step by step. We want something that the steps when you sit down, 4 basic steps, and you're going to go through those steps over and over. And you want something that you can repeat. Whatever market conditions you have doesn't affect you. You just adjust to it, keep right on going. Just so you guys know, the methods that I'm going to share, there's nothing secret or magic about it. I think one of the critical things to me is it will come down to you and how you view the method. But these methods go back to when I first started trading back in the mid-90s. So the market conditions, the platforms have changed, the market conditions have changed, electronic trading has changed. the instruments have changed, and yet the same method still works. And I'm sure, wouldn't you guys agree, that's one of the most important things you could find in the market? Not a system that is curve fit that used to work, but something that will work this year and next year and 5 years from now and 10 years from now, that you would still be able to do it. That's the jeopardy of buying most systems. It's curve fit, the market changes, and now it no longer works. While we're saying that we want to make this simple and repeatable, do not go into this expecting that it is going to be a red light, green light system. It does require you to think. It does require you to analyze. From that standpoint, for many individuals, especially if you haven't done that to this degree, it's not comfortable, because you are changing sometimes intraday. You're definitely changing from day to day. But sometimes intraday, you have to change your perspective. You look at this, and you'll see this on these recorded trades, where I'm looking at what's happening. It's like, normally on crude, I would trade breakouts any day because the breakouts they carry. And you can get a very nice scalp very quickly. But what do you do when you go in and it's not carrying? You look at the breakouts, and the breakouts are running 6 or 7 ticks, and then they're swinging back 25 ticks the other direction. You have to adjust. You can't trade breakouts that day. You adjust very quickly, and you say, okay, I have to skip the breakouts. I have to trade the retracements now. So it is, because of that, not going to be a system that just flashes a signal and you're in. Constant analysis, constant change. But the nice thing about it is, by mastering that, it really puts you in tune with what the market does, which is to change. The market is constantly changing and throwing people off guard. You just get used to trading it this way, and then it gets real volatile. We go back into a normal period for 2-3 months where volatility picks back up, and you've been used to, like for guys that just started trading over the summer, they're used to this slow market. It's not moving quick. So because of what it is, even though it's a little more work, in the long run, it's the only thing that I have ever found that will last, because of the way that it works. Now, as we mentioned when we were talking about the workshop, like when I did the presentation at Ninja, I pointed out that we're going to go through 3 different perspectives on scalping. One of them is to understand how to do that from the time and sales. The second method would be how to do that where your primary tool is the dome. And then the third way of doing that primarily would be from your chart. And in fact, you'll see, guys, and I got to tell you, you'd probably smile, but for you guys that have been with me before, when I recorded the session on the NQ, and I said I'm going to do this just off the chart, I recorded that without a time and sales up, without a dome up, just off the chart. Freaking hardest thing I've ever done in my life. I just wanted to twitch over there and open a time and sales and look at it. It's so hard to me to take that off of a chart when you're used to doing it off of the time and sales. So, I realize in working with individuals that people see it differently. And so we're going to show 3 different ways of getting the same picture, same information. So if you can't figure it out on the time and sales, big deal. Do it off the chart, do it off the dome if that's the way your brain processes information. So we're going to spend some time each day with one of these methods. Now, if I had to rank them in order of most effective, it would be just as it's shown here. Time and sales is the best. If you can't do that, do it off of the dome. Have your time and sales there. Try to learn the time and sales while you're working off of your dome. The chart's always going to be there as a reference, but to actually go to the charts I'm going to show you and try to do it completely off of them, I would say that would be the last. Like you can't get it the other 2 ways. we'll still show you how to do it each way. So whatever works. Like for Ken, um, I know you've commented in the past before on watching, um, watching the time and sales is very tough, doesn't process right for you. You need to see it on a chart. So we're going to go through that as well. Let's see, topics for today. This is kind of what we're going to go through in today's sessions. I know that for some of you guys, a lot of this will be a review. So I don't feel like, for you guys, don't feel like you have to stick around if you don't want to. I know there's going to be some basics. There will be a recording of it. I don't want to push anybody, but at the same time, for you guys that have been with me over the 3 weeks of that prior program, there's going to be some things that are very much repetition to you. The goal of the 3 days, first of all, I do want to convey the basic information so that you walk away saying, okay, I understand all of the basics here. But I also want you to understand how to sit down, and when the market changes in December, when the market changes in January, when the market changes in November, I want you to be able to still use the method, to still adapt, to still trade that. And then in that being able to adapt, which we already touched on briefly, is the ability to sit down and do this on crude and then say, I don't like the way crude's moving today. It's just completely spastic. It's thrashing around like a chicken with his head cut off, and that doesn't suit me. I'm going to switch over here and scalp this or that. I want you to be able to adapt very quickly to that. But the final point here, learn how to believe. I do think that this is something that for many individuals, this is going to be the make it or break it thing, is learning to believe and trust in the method. Does that make sense to you guys? When you're doing this and you're flipping back and forth and you're thrashing around and you're banging the market both directions, and 1 minute you're going long and the next minute you're going short, it is very difficult at times to believe in the method or to believe in yourself. And I think these recorded trades is going to it's going to highlight that. And I think it's one of the things that I would say in advance, after editing that and watching that I hope that you guys take away and that you pick up on, is that when I go into those instruments and I'm trading those, I absolutely believe something is going to happen. And in the intellectual part of my mind, I know that there's a 50-50 chance that it won't. But I absolutely believe that it will. If I don't, I couldn't pull the trigger. And Calvin, see, your point is exactly why it's hard. Calvin said to believe is the hard part because it's hard to come back after a loss. One of the things I would say in looking at this, this is a tough one on sim, on some instruments. I don't normally encourage sim trading. I have frequently encouraged guys to look at something like reading tape on the 6E, taking the entry on the Euro US dollar, where you can scale down to a penny a tick, 10 cents a tick, whatever you want. But in doing that, you lose a little bit of the flexibility of Ninja. Your order entry platform on your spot Forex is likely not going to be as quick and as friendly as it will be here. So if you do this on sim while you're trying to build that belief, one of the things you're going to have to make sure you keep in mind is that the fills that you get on sim will not be the fills that you get on a live market. And you'll get very close on the S&P, but you do that on crude, your fills will be all over the place. You come in and put a market order on crude, and you may get filled 10, 12 ticks away from where you thought you were going to get filled or where you would have got filled on sim. I do find, do you guys, let me ask you this for you guys that trade crude, do you find that you get price improvement somewhat frequently on stop orders? I'm just curious. I see it pretty frequently where you get a tick or two improvement. I mean, I would say I get a tick or two improvement uh, probably just about as many times as I get a tick or two slid. John, you say 50-50 for you? So that's what I kind of feel. There's many times I even on the exits where it jumps so quickly, and because of the order in the queue where we sit, it moves and it bangs down, and we get executed 2-3 ticks better. So I don't know. It's you just have to be cautious with it. We want to learn to believe, but be cautious with that on sim. The S&P doesn't jump around that quickly most of the time. So usually the fills that you get if you placed a market order on sim, at worst case you're going to be one tick away when you do that on a live account. Usually you'll be the same. Let me move on here. I want to go through this briefly today because when you watch the video, some of these trades you're going to say that's not scalping. When I talk about a scalper, and we talked about this at the presentation there at Ninja last month, the industry for a lot of years has defined a scalper as someone who's trying to make the spread. And on many instruments, that's not realistic. It's not feasible. If you come in, you've got a $5 commission and you're simply trying to make the spread on the YM, you guys see the problem. It's $5 a tick. You can't make the spread. It covers your commission. That's it. In Q, same thing. $5 a tick. You can't trade for the spread. You can't scalp that. Where that really got started was back in the day when electronic trading was available and the equities still traded on a fractional basis. Some of you guys have been around that long. You remember that? We used to call it a teeny. It was a 16th. And you scalp 1,000 shares, and it was $62.50. A 16th of a dollar, that's what it made you. It's 6 1/4. And 1,000 shares, it made you $62.50 on that 6 1/4 cents. You get an eighth. Many times you could capture the spread would be an eighth in an instrument. 12.5 cents, 1,000 shares. You sit there. You could make some money trading the spread. When that went decimal, I would say realistically, scalping for the spread was done unless you were able to trade huge size with virtually no commission cost. So when I refer to scalping, I guess I think of it. Let me contrast an intraday trader and what I'm going to try to teach you. For an intraday trader, I see a guy who probably is going to take 1 to 5 trades in the course of a day. That's all he'll get for setups. So he may sit down and it may be an hour and a half before his first setup occurs. He takes that trade and you're tired and you're done. And that was your day. You're definitely going to pull a bigger trade, but that's it. Or you might be trading a 1-minute chart or a 2-minute chart, and maybe you're taking 7, 8, 9, 10 trades a day, depending on your setup. To me, when I think of scalping, here's the way I imagine it. It is exactly as it's spelled down right here. To sit down, you open up your time and sales, got your dome, got your chart. Don't care what the structure is, don't care what the news is. Doesn't matter whether the market's moving fast or slow. Doesn't matter that it just rallied up 20 points on the S&P. Within a few minutes, you've got a trade. Take the trade, pull some money out, kill the trade, very short term, and within a few minutes you've got another one. to me, it doesn't, this doesn't so much get defined on a time frame. I want to just put this up, and I'd like to invite your feedback on this. We're going to do a few polls, and I would just like to get a bit of background, and I'll try to put this up. You guys will obviously be able to see the results. If you don't understand a question, don't answer yet because it won't let you change it. So we'll go through this when I ask the question. Now what I'm going to try to do, just so that I get this in the recording, I'm going to just drag this in and hold it here so that I can record it real quickly. But here's my question on this poll, and you guys will be able to vote on this. Have you ever tried scalping before on purpose? I'll let you guys vote on that. We'll give it a few seconds in between these here. Just for you guys that haven't voted yet, when I say on purpose, I'm not talking about chickening out when you went 2 ticks positive, but where you deliberately tried to take a little scalp. Okay, so let's we'll close that, and here's the results. 90% yes, you've tried it before on purpose. 10% say no. Let me try something here. Give me just a second. Whoops, sorry, I had that muted there. I apologize. Not sure what the last thing you heard was, but I accidentally muted that while the results were up. I am doing this just a little bit different on the broadcast right now, and so I'm doing this just so I can get the polls as part of the video. In the past, I've had to record that on a separate computer and then take the screenshot and splice that back in, and just putting in 4 or 5 polls would be about an hour and a half of editing. So I'm using the little viewer. I don't know whether you guys can even see it or if all you see is the poll. But I'll go ahead and close this out, and then we'll put the results up. 76% says yes, they've tried to read the tape. A quarter of the group says no, they have not. You guys will probably see, well, no, it doesn't show. Do you guys just see the slide? What is a scalper? Okay. I've actually got another window sitting in front of that, but it's transparent apparently to GoToWebinar. So that's kind of cool. At least I was playing with that, figured out a way to get it to work, which is beneficial because that's what I was hoping to get this in the recording a little more easily. On this next one, just the way that you visualize a scalper working, it's beneficial to me because if I know what the expectations are, I know what the beliefs are, I know what the mentality of the group. It helps me either as I explain or kind of tailor things. So we'll give 10 more seconds here. Okay, so we'll close that and share the results of that. The majority of the group thinks 10 or 20 trades in a day, and nobody thought 40%. 10% of the group thinking 50% or more, 50 trades or more a day. I would say that when I was scalping, I averaged about 70. But I have known other scalpers that took better than 200 a day. And what I have found for me, because I'm not just scalping for 2 ticks or 3 ticks on something like the crude. for me, the way I would define scalping now is definitely different than the way I would have defined it 10 years ago. The the interesting thing about it is, you get a nice entry, a good precise entry on a scalp. If you can pick up 20 ticks on it, the money can stack up pretty fast. When I traded the in-queue session, for example, which I remember because I was just re-editing that last night, trying to get the sound synced up. Um, it was an hour and a half, including my all of my discussion, explanations, everything else. And it ended up when I edited that and cut out just the waiting at times where it's like, look, we got to wait for news, we've got to wait for this or that. It ended up right about an hour, but it was actually like an hour and 20 minutes, and took 12 trades in that hour and 20 minutes. Um, Total on those 12 trades at $5 a tick, it was $690 with one lot. So, Peter, you ask, isn't less better? I think it probably is. To me, if you could get 3 scalps on crude and mac it for 200 apiece, I would say that's better than taking 25 trades on crude for 6 ticks apiece. Exactly, Calvin. Calvin says, I remember what you said last time, New. It actually was a gal, I think, the one that I was talking about, who made $500 a day scalping, but the entries were so good they could have made 5,000. If you find that you're bailing out and you're taking 5, 6 ticks on crude, but the majority of the time it goes on to run 25 ticks, you think of the money. I mean, you're taking $60 out when you could be taking 300. Why wouldn't you take that free money? So I do think that if you take this scalpers mentality, basically again, what you see on the screen right here, you sit down, then a few minutes you have a trade, take the trade, take your money, then a few minutes you have another trade, take the trade, take $60, $100, $200, whatever conditions will give you, whatever that instrument will give you, and then do it again. That, to me, is the best way of going about it. This one here, you probably already know what I'm thinking, but we'll let you guys vote away on that. Okay, so we'll close that out and share that. Now this, not that this is a knowledge test or anything. This one, to me, is a little bit of a trick question. John, when you're asking with one contract, are you referring to the person making 500 a day? Are you asking if they used one contract? The majority of the trades were one contract. They would take 2 if they felt really confident and they were doing this on crude. 5, 6 ticks at a time. The entries were so good they should have been getting 20, 30, 40 ticks. Here's why I think this is a bit of a tricky question. Let me just address this as it sits. We got a portion of the group says a couple ticks. There are not very many instruments that 2 ticks could make you money. I know a number of individuals that scalp the bonds. Yeah, Gerardo, exactly. You're right. You're right behind me. Depends on the instrument. Not very many instruments that 2 ticks will make you money. Like we were talking earlier, could you do that on the YM with 2 ticks? You got $5 to cover your commission, and then you made $5 profit. But can you trade that with a 2-tick stop? Can you still be at 1-to-1? It's not likely that you're ever going to make money with that. I mean, if you do the math, 50% of what you make goes to cover commissions, which means you've got to be right 100% of the time if you're ever going to make anything. By the same token, I do know a number of individuals that scalp uh, in the bond and notes, and you've got a higher tick value, and they'll scalp one tick with a one tick stop, or they'll scalp two ticks with a one tick stop. Uh, you couldn't pay me to do it, but that's what they're doing. If you had something like the DAX with an extremely high tick value where you're nearly $40 a tick, you can do it, but I guarantee you this, you will be hard pressed to find a safe way of trading the DAX without at least a 7, 8, 9, 10 tick stop. And so to try to take two ticks, again, man, if you're ever wrong, it's going to wipe out half a dozen trades if you're at a good risk reward ratio. So if that's the case, I would say the instruments where I would even remotely say 3 ticks is possible would be something like the S&P. You need to be at $12.50 a tick, but more importantly, you need to be able to hold the trade with a 3 tick stop. Do you guys see the problem with that? And we'll talk about this as we move on, but in trying to see where people are, where you guys are taking a scalper would try to take 5 or more ticks, that's where I'm at. I would say 3 or 4 bare minimum on the S&P. If there will be some situations where that's all you can get. There will be other situations where 5, 6, 7, 8 on the S&P is very doable with that same entry. It just depends on the day. But when I get on something like crude, I couldn't take it off. I mean, to me, if I can't get 15 ticks out of it, I wouldn't take the entry. There will be situations when you realize that's not what the market's giving up right now. So you have to adjust. So as we go through this, for you guys that were thinking 2, 3, 4 ticks, whoop, sorry about that. Appreciate that, Bill Gerardo. The what I was saying right here, and I'll just clip the dead spot out because there was nothing significant about it. But what I was saying was that for you individuals that were thinking 2, 3 ticks, or even 4 ticks, I would say 4 ticks is kind of the threshold for really making profit. For those who are thinking that this is going to be something getting 2 or 3, you would need to be at a 90%, 95% win-loss ratio. You would still need to be at a 1-to-1 because the commissions will destroy you on most instruments. Let me see. I think I've got a couple more that I wanted to go through before we get into the platform. Oh yeah, there are a couple things here. And let's just go through the rest of these and then we'll address it as we go. Sometimes and the reason I want to ask this, sometimes what people imagine, it's going to affect their viewpoint of the whole class. And so if I see people are imagining this is going to be something different, I want to correct that right now and save you the hassle. For you guys that, if you read all the fine print and you registered through, through the constant contact system where you made your payment, you realize on there that I do tell individuals right on there that if you're not happy after the first day, I will give a refund, no questions asked. So I want to make sure right now somebody's not going into this with the wrong expectations, where they're not happy at the end of the thing and say, man, I thought we were going to get 2 ticks in less than 30 seconds, and that was what scalping was. Yeah, John, that's a good point. Is if you get slipped, and you don't have to get slipped, but it depends on the way you're entering, if you're using market orders or not. The certain entries, stop entries on a volatile market, you'll get slipped 2 or 3 ticks. Okay, so let me close that, and we'll put this put the results up here. I would say I wish they were all 30 seconds. Let me put it that way. I've always laughed about it because I can sit on a trade like nobody's business. But my favorite trades is when it just absolutely explodes, something like crude, 4 or 5 seconds, and you're at your target and out. You're not exposed. I'm sure you guys would agree that's like your best case scenario. You get trades like that every once in a while where 4 or 5 seconds just explodes. You get a full 30-cent target on crude. You're out, and it turns around and reverses and comes right back to your entry. And man, you want to talk about feeling like a stud when something like that happens? You feel invincible for, you're floating for an hour. 30 to 90 seconds. That I would say is going to depend a lot on your instrument and how it's behaving on that particular day. Yeah, Calvin. That's Calvin says, I hate to sit on a trade. I want the ninja lady to say order filled and target hit in one sentence. I've had that many trades on the DAX, where you actually couldn't hear one or the other because they overlapped each other. You never even saw the trade go live. I mean, right at the time you saw your orders appear in the dome, they disappeared. Love that kind of stuff. But that's not realistic in most situations. Let me tell you my viewpoint of this again, because I don't want any misconceptions as we move forward. The majority of my scalps, if I was taking a scalping entry, I would be in by far the majority of them longer than 5 minutes. And the reason for that is that I would be doing multiple lots. I get in, I get that target, and I'm going to manage it and scale out on a good percentage of the trades. But where I'm going to do that is going to be those situations. Let's say that I look at it, I'm a reversal trader, for you guys that don't know. Love trading reversals. And if I happen to take a scalp, I'm short up into the high. We just made a new high and I scalped it to the short side. I'll be in that trade for the next hour if I have my preference. So when you go into the scalp, if you need to be in that 30 to 90 second range to feel comfortable, would you guys say that it makes sense that you're going to need to be looking at something like crude, the DAX, soybeans at the open, the YM, something that can jump up and down the dome real quickly, get you your ticks and get you out? Because realistically, when you start watching the S&P, as we move more into the winter, you start watching the S&P and it thickens up a little bit. I mean, it's very easy to be 5 minutes to try to get that 4 ticks. You don't always get the explosion. Yeah, Al, no problem. You say you assumed it meant the time required to the first target only. For a lot of individuals that are scalping this or looking at this, it's just one lot. They're not scaling out. They're just trying to scalp, generate some income. And that's why a lot of people, the scalping is kind of appealing, is that you can come in, quick trades, take some income from it, and they want to be able to get some income, get a couple $100 out of it, build the account up. They don't have the ability or the nerves, or for whatever reason, they don't have the ability to go in there and take multiple targets and turn that scalp into a swing trade. So that's why it not a problem. Don't worry about it. But that's kind of the the thinking there with that. The other three, we'll deal with those a bit later. So let me get this drug out of the view screen. What I'm going to do next is we're going to go through the basics for the platform setup and the workspace setup that you're probably going to find the most beneficial. And for you guys that haven't been with me before, when we're recording on Camtasia, these files get very large. I'm already sitting at 1.5 gig on the recording this morning, and if I recorded the whole thing straight through, it will crash probably 3 or 4 times out of 10. It will crash, and I risk losing the whole recording. So we've been at this. We're sitting here right at an hour. Let's take a 5-minute break. We'll come back at I don't know what time zone you're in, but let's come back at 25 minutes before the hour, and we'll go through the platform setup. That will allow me time to reset the recording. And if you guys have your platform, whether it's Ninja, whatever platform that you're using, let's get your platform turned on. We're going to go through a little bit of setup and workspace type stuff to get us started here for the actual training on this. So we'll be back in 5 minutes. Okay, testing. Okay, we got sound. Ken, you said you spent an hour with the tech several weeks ago to go over a bunch of ideas, see if it produces any results. Were you making suggestions to them? You mean when you say going over ideas with some suggestions? Okay. You know, some of the stuff that I've suggested to them as a partner, they've implemented, and there's been other things that they're just like completely resistant to. And it's one of the things that has really frustrated me is the dome, that you can't resize the pick and dome. It is one of the dumbest things I've ever seen, that you have to add rows to resize it instead of just being able to drag it higher, you know, bigger, smaller. And I've been complaining about that for years, and they're like, yeah, that's a good idea, thanks. So, who knows? You complained about that too, huh? Okay, let's take a look at this here. And when we go for platform setup, I realize that this, especially for you guys that have been with me for a little bit, this is going to be repetitive here. But there are some specific things that I would do in terms of setup depending on how you're going to try to implement this. And so I want to just, just cover that in our session today. Because as we go forward through the week, this is, we'll be using it this way, and I think it's going to be beneficial if you guys understand there is a reason why I normally do things, and if it works differently for you, fine, change it. But I'd rather have somebody do it what seems to be easy. Normally in my trading, this would be, if I was just going to trade, I would essentially have a 5-minute chart, I would have a time and sales, and I would have a dome. And the 5-minute chart, I would either do that, or I would take a tick chart that would be comparable, and I would scrunch that down. And by scrunch it down, I guess I should be more specific. I would compress the time axis so that I could see the greatest amount of history, greatest amount of data there. Does that make sense? I want to see the areas where it's likely to come into, where it's likely to reverse. If I was doing it on a tick chart, this is what it would look like. If I was doing it off the 5-minute, I actually would be a little bit interested in what the candles were doing. And so I would normally have that spread out just a little bit so that I can see what the individual candles are doing. Where have they pushed up and gotten rejected? Where are the wicks, the shadows? Now, if you guys think about that, maybe I should ask, is anybody not familiar with candlesticks? And I don't mean that you've got to have memorized all the names of the different patterns, but are you familiar with what the candlestick is? If anyone is not familiar with that, put an N out there in the text. If you are familiar, you don't need to answer, but if you're not familiar with what a candlestick is, I won't call your name out. I won't embarrass anybody. Just some people don't use them. Some people use a high-low, open, close. Some people use a line chart and so forth. Okay, let's just touch on this very quickly. We'll expand this out so we can see it. 5-minute candlestick, or any time period of candlestick, you will have two small horizontal lines, and those represent the open and the close. You will also have something that represents the high and the low, and there may be times where a candle opens at the very high tick, sells off, and you don't have a wick sticking out of it. That's because that is the high. The candle, the way that we know which direction price was moving is typically by the color. And if we see it colored red, for example, the way that I've got mine colored, I know that this started trading here at the sideways. And let me just put this on a screen draw. It'll be easier to do that than it will be to point. But if I look at this on a screen draw, I know that the candle opened up right here and it closed right here. And this would represent the low, as low as it got, and the wick at the other end would represent as high as it got during that candle. Morning, Chris. Glad you made her in this morning. When we look at that information on a 5-minute candle, you know, we could say on that candle, okay, it's 35 cents tall. But it's very tough to visualize what's going on inside of that candle. I personally prefer to use the tape to see what's going on inside of that candle, but that doesn't necessarily work for everybody. So because that doesn't work, it can be beneficial to look at a short-term tick chart to actually see the wiggles. See, if we think about it, for an intraday trader, they're going to take this bigger pattern. Let's say that they're, as an intraday trader, they're looking at something like this where they have a rally. Let's imagine that this is at resistance. They see the candle turn red. They see it closes below the low of the prior candle. And for a price action trader who's trading like an intraday pattern, he then takes a short on the open of this next candle here. And he puts his stop off over the high. Basic price action trading. But for us as a scalper, while it's good to know the bigger picture, we're going to be living inside of this candle in the little wiggles. But to begin scalping, and especially with the goal of longer term trading success and being able to trade larger and to be able to trade some swing trades and to trade some intraday type trades in around our scalps, it's very beneficial to have a basic understanding of the price action. You know, the candlesticks, the way they relate to each other, what it teaches us about the participants in the market. And it's not just that it traded down, but it could teach us a bit about the panic, or it could show us, it could highlight areas where buyers came in, where sellers came in. So when that is the case, we may take a look at a bigger picture, like the candle that I'm pointing to here. And we look at the high up here at 85.40, and yet it closed 40 cents lower. Would you guys agree that that would be beneficial as a scalper to see something like that on a candle? To understand that on the bigger picture, when price pushed up to 40, they pushed it down quickly enough and aggressively enough to close the bar 40 cents lower. And then we turn right around in the next 5 minutes and we come right back up to the same area that just had sellers. Does that help us then as a scalper if we're saying, hey, I'd like to get 20, 30 cents, 40 cents? Well, there's a number of things we can take from that. One of them is that if they pushed it back that quickly, if they're still up there, we shouldn't have trouble getting 20 ticks out of it. Does that make sense? We're going to take this picture and we're going to use this to a degree to determine the potential targets that we have, which side it's safe to scalp to, which side could be dangerous to scalp to. So let's imagine that that's our picture at the time we're getting ready to take an entry, and we've rallied up and gotten rejected and rallied up again. Now, what do you guys think? Would that be a wise move? Do you suppose, to buy a breakout to the upside when you just saw that aggression from sellers and they pushed back into the area, and we use our ruler, which if you haven't used that ruler on Ninja, it should be your best friend. It's Control F3, or you can come up here to the drawing menu and up at the top, ruler. But would you think that when it rallied up $1.93 without much of a pullback, and even if you took the rally from the little pullback it had, you rallied up $1.69 with no pullback? You see sellers come in, kick it in the head, buyers take another stab at it. Anybody willing to scalp that to the upside? And see, I think the same as the comments that I'm getting out here, that it would be foolish at that point to do. So one perspective that you want to have on this, whether you're taking this off the tape, whether you're taking it off the dome, or whether you're using the chart, is you want to have the bigger perspective of what's going on. Now, when we set up that platform, what I'm going to be using through these videos that you watch, there's a couple of them that I recorded where I had a 2-minute chart. I don't really care. 2-minute, 5-minute, 15-minute. I wouldn't go longer than a 15-minute, but something to help you determine the structure of what's going on. And Jeff, your question, don't you need multiple time frames? If you had been watching a 10-minute candle, you wouldn't have seen that. For me personally, Jeff, when I'm watching that in my head. I'm watching that on the time and sales. I shouldn't say I'm watching that in my head. That makes about as much sense as anything I've said all day. I watch that on the time and sales, and I tend to have an anal memory for numbers. And we go up and print 40 and get kicked back and close. I know 40 in my head got kicked, and I really, the candles, I see that in my head, and I can hold on to that for a good 30-40 minutes. So do we need to go multiple time frames? I'm going to show you two. That would be my recommendation. Personally, would I do like a 60, a 15-minute, a 5-minute, and a tick chart and try to read tape? No, I wouldn't. Realistically, I don't think a person needs to go any longer than 5 minutes. You know, we're scalping. Do we give a rip what's happening on the daily chart? No. It's right here, right now. What's price action right at this moment? Longer than the 5-minute time frame, I don't know that it's necessarily effective. The 5-minute candles, it gives you a good picture. You can see whether there was any type of decent pullback lately. You can tell whether you're getting extended. You can see some wicks where buyers and sellers have come in, put some pressure one direction or the other on the market. That's all a guy needs. Now, when we have that chart, you guys will have more flexibility than what I have broadcasting or presenting to you. When I'm broadcasting, like right now, I've got this on a little 19-inch monitor. I don't even turn that 19-inch monitor on in my normal trading. I use it for broadcasting. It's set to a lower resolution than my primary monitor because it transmits through to you more quickly. So when I start recording, then I have even less because I'm recording a slice of a monitor at a fixed resolution. And so what I did, when I'm working that way, is I take two charts and I just overlap them on each other. One of them I drag down so that the title bar of the lower one is exposed, and I can click on the scroll bar. I can click on that scroll bar and bring my 5-minute up, or I can click on the title bar and bring the 10-tick chart up. So if you don't have much space, I would suggest doing something like this. You look over here, you kind of keep an eye on the bigger picture. You see what's going on. Are we coming down into resistance? Coming down into support? Are we rallying into resistance? Have we had a pullback lately? Any type of a retracement? And the reason that we're looking at this, again, you will see this on the recorded trades on the video that you're going to receive tonight. You're going to find virtually every single trade I am referring to this big picture. What is the big picture? Where is the target? Where can I get right now? Something that you'll want to be familiar with in addition to your ruler, which is F3 on Ninja, is going to be F8. That would be your Fibonacci's. I think it is extremely beneficial in picking targets. We take one number interests me on the Fibonacci's, is the 618. I draw the 38 too, and I draw the 50 because I expect reactions between the 50 and the 62. And because they're reciprocal of each other, if I don't know how to draw it and I draw it from the end of the move to the beginning of the move and it's upside down, I know simply that it's the far line. When it comes to picking targets, you will see me again using those Fibonacci's over and over and over. You can get to those from your draw menu if you don't memorize the hotkey. Get your draw menu, Fibonacci retracements, F8. Most of you guys have seen me use those, and you will see that, like I said, literally every single trade referring to that big picture. I tend to do the Fibonacci in my head. Like most things, I do it in my head. If you need to draw it, draw it. If you don't. You will find over time that when you look at a move, it's pretty easy to eyeball half of a move, and then proportionally you know that you're a little bit outside of half. And you draw this on enough moves, pretty soon you're saying half is here. You look at it on the basis of a candle, half is here. You see those proportions, it gets easier. But these are things that you're going to want to be familiar with and acquainted with in terms of as a scalper, saying, where do I need to start exercising caution? One example of that would be on a chart like this right here. You come in after the open, you look at this rally up, take your Fibonacci, you look at that level, you're coming down into that level. Would you still be looking to short to the downside? Is that logical? If I'm coming down into a zone, and I don't say this because I think Fibonacci's are magic. A lot of people use them, and more often than not, when you come into a Fibonacci off a significant move, you will see some type of a reaction. So that reaction could be a 20 tick move. You'll notice that like in one of the recorded trades. Wait, is it on this? Yeah, it was on one of the recorded trades on this video. I'm trying to think because I'm working on several projects right now. But coming in there and drawing Fibonacci's, two Fibonacci's right at the beginning of the day off of two moves, and one of them turned within a couple ticks, got through it by 2 or 3 ticks, turned around, and this was 30 minutes after it was drawn. The other one, it hit it, got through it by a couple ticks, and was instantly knocked back 20 ticks. So having an idea of where it's likely to stall does two things for you. You could start looking for that as a potential retracement, like a reversal, not a retracement. The other one is to say take the short side off the table when you get down into this level. We've moved down that far with no retracement. Take it off the table and don't buy a breakout to the low side down here. It's going to be very beneficial. Now, Jeff, you say the 61% also happened to be a previous swing high. Do I pay extra attention to that? If things line up, if there's some confluence there with others, and I'm assuming you're talking about this high over here with the red arrow. Yeah. If that happens to line up with a breakout area, and by a breakout area, what I would refer to Let me get rid of this Fibonacci. Most of you guys know what I'm referring to by a breakout, but or excuse me, know what a breakout is, but I tend to have kind of a very specific definition that I'm interested in. When you look at a trend, and your trend is made up of either higher highs and higher lows, or vice versa, and we come in a trend, and let's just say that we look at this move down, and we've got a high where price sold off, rallied up, sold off, rallied up. We've got this high, sold to a new low. I am interested in breaking above a prior swing high, especially when it is a change of trend. When that potentially happens, to me, I'm starting to focus on pullbacks. I get my pullbacks, I'm going to be looking to scalp to the long side. And until that rotates again, I will be looking primarily for scalps to the long side. Why do you guys suppose that is? As a scalper, do you think that it's beneficial to be directional on your scalping? See, so far I've got several of you saying yes, and I absolutely agree. If you're scalping, you're probably having a better odds of success and a quicker fill if you can get in line with the current direction. Now, we realize there could be several different directions going on. You stop and think about it. We could have one direction on our tick chart. We could have another direction on a 1 minute, a different direction on a 5 minute. That's different than what we see on the 6 minute. That's different than the daily. Okay, so if that's the case, I have to eliminate some of that and say, I don't give a crap what's happening on the daily. I don't care what's happening on the hourly. I don't care what's happening on the 30 minute, the 15 minute. I am interested in where the 5 minute is for levels, and then let me at that short-term tick chart. In my case, I build it in my head from the tape. In your case, you may end up doing it on a short-term tick chart. But if we can define the current direction, whether we get in from a pullback or whether we get into that current direction on a breakout, you're going to hit your targets faster the majority of the time than trying to fight it. Now, that does not mean I won't try to fight it if we rally into resistance. I absolutely will start trading it as a reversal trader. But if I start trading that as a reversal trader, do you guys know what happens to the stop? I'm no longer trying to get in with the trend, but I'm trying to pick a reversal off a 5 minute chart. And there goes my stop on crude from 10 ticks to 20 or 30. Can I get that on the target? Yeah, but if I'm trying to pick a reversal, that is likely going to take a larger stop. So our goal in looking at this chart, the 5 minute chart, the reason we have that here is primarily to determine the trend and to determine areas where likely we're going to see buyers or sellers emerge. Now, Ken, you're asking, how do I define a change in trend? This is kind of a sloppy example. Let's find something here. If I looked at a trend, I would define a trend, and we could find a couple trends on this chart, but I would define a trend as either lower lows and lower highs, or higher highs and higher lows. So if I came in and I looked at this chart and I see this low and I see this high, and I don't know what was before me, and I don't really care what happened yesterday, but I know it was up here. So I know that we've had a higher high than this high, and here's my low. If I come down and I break that low, now I've got a new lower low, and I don't know how low it's going to go, but I know that I've got a lower high, and now I know I've got a lower low. So when I come down and I finally get the low and it tries to rally up, again, I've got a lower high. When that sells off again, another new lower low. When it rallies, we've got a new lower high. Come down again, we've got the lower low. The point in time, and Ken, you got to be very careful with this. I want to qualify this statement. The point in time where I break that prior swing high, that gives me a heads up that potentially the trend is going to change. But what would it require to say, okay, the trend changed on this chart, on this time frame? See, until we get a pullback that makes a higher low. In other words, until, let's say that we rally through that and we pulled back and it couldn't get back down to this low and we rally again, that's when I say the trend changed. But when I look at that, for my purposes, I will start to speculate as soon as we break the high and say very good potential for a change in trend, which says to me the next pullback, that's the one I'm interested in. As a, and we'll be looking at this on very small reversals as well, or we could look at this on our 5-minute. If we came in like what we see next on the chart, and again, this is stuff you'll see me analyze this way on the live trades. We rally back up. We don't know what was before us, but we rally back up. It sells off. They try to rally, and it gets kicked back. They can't get back up to this high. It's a warning sign. Sellers are aggressive. They try to rally it again. They can't get back up to this high. This area becomes a very lucrative area because at that point, if you can define that, see, what does that do for you? You've got a line in the sand that, if broken, gives you a very quick entry, very quick target usually. The trend was going one direction, and now all of a sudden they can't get it there anymore. And that is where we open up the potential for a stop entry as we pound down through that level. And you'll see those fairly evenly mixed on the recordings, stop entry versus a pullback. And I explain pretty thoroughly in that recording how I identify that, why I chose to use that method, when I use it. So does that make sense to everybody? Does anyone, if you have questions, fire away as we go. But in our setup, this is the purpose of the 5-minute is let's focus on that and take that away. The purpose of the 5-minute is to show us direction, and it's to show us areas where we've got to be cautious. We either say, hey, we don't have a target to this direction. I have to take the longs off the table. No more long entries unless we completely break out of this area and start a new zone. Does that make sense? That's what we want from that. I'm not going to get fascinated with yesterday or last week or where the July contract traded 2-3 months ago. It means nothing to me. I'm looking at what have we been doing since the open. What did it do in the pre-market? Where was yesterday's high? Where was yesterday's low? Do we have any significant, like a consolidation that could act as support or resistance? A couple swing high, a couple swing lows, and so forth. So if that's the case, that's what we want to take away. Now, Jeff, with your question, you say in this example, did Fibonacci help? I'm talking about the break below those prior 3 lows. Jeff, are you talking about this area that we were just drawing? And you're saying Fibonacci, so we'll go F8 while the chart's active. Are you talking here? Well, if you look at what happened, that Fibonacci's at 83.64. In this candle, it touched it. Let's expand it out. It touched it, moved back up a few ticks. In the next candle, they rallied it back up as high as 78. If I'm coming right down into that zone, let's think about it this way. If I see this and I define a break of these lows as a stop entry, my first question, do I have room to get a target before we run down to that fib? So I take this a tick off that low, I draw it down to the fib with my ruler, or I do it mentally, and I say I've got 26 ticks beneath me. Does that give me room for my scalp on crude? That would just be a potential bouncing point. But do I have room to get my full scalping target before we get there? This is my mentality. You know, when it got there, it obviously bounced up as much as 14 ticks and then subsequently rolled over through it. Doesn't mean it's going to stop it every time, but the by far the majority of the time, if it's been a nice sharp move, you will see some attempt to buy it up or sell it, depending on the direction, when it comes into that. So if that's the case, and I'm coming down, and let's clear this off. I'm down at this candle. Would I say on a little time frame that I'm scalping on my 10-tick chart, would I say I'm going to take another breakout to the downside right here? And I look at that and say, we're only 10 ticks away from a potential bouncing point. If I still believe that short is the direction, let them bounce it and short the retracement. Chandra, you say you're confused with fibs, like where's the entry? The thing that I do with fibs, I'm not looking at this necessarily for the entry. I'm not saying I'm going to draw this and I'm going to come buy the 618. What I'm looking at is saying if I get short up here, there's likely to be buyers nibble at it when it gets down to the 618. So do I have enough room before I get there to get out of the trade? Once we get there, if I see the buyers, I will have my own criteria off the tick chart for saying the buyers are there, they're aggressive, time to start looking to the long side. But I wouldn't, on a 5-minute chart, I wouldn't just come in and say, well, I'm just going to put an order out there and buy that blind. Now, when we get into the rest of the instruction on this, and we're actually scalping on the tick chart, or we're scalping on the tape, we'll talk more about the fibs and how we use that as an entry point. But for right now, what we're discussing, we're just identifying a potential turning point and saying, can I get there? Do I need to restrain myself and only take 10 ticks on this? Do I need to just sit on my hands and don't take the trade at all because it's too close? And let's see how it reacts there first. Let's keep moving along, and we're going to talk about this. So if there's still confusion about the concept after we've gone through things here for the session, we'll do some final questions at the end. Next thing on my trading setup, and this is going to be a very small count tick chart. And I'm going to show you another way of doing that on some instruments that works. I was actually talking with a client couple of 3 weeks ago who mentioned this. They had it up, was a completely different thing. They had all these indicators on it and so forth. But as I was looking at this, I thought, it actually would make this very clear for someone who has trouble seeing that. Doesn't work as well for me on crude, but on something like the NASDAQ, the S&P, stuff that's not so jumpy up and down the dome. Crude is very, very jumpy. It actually works very beautifully to highlight the little points in time where we're looking for trades. If you guys want to just jot a rule of thumb down, on most instruments, a 10 or 15 tick chart would be an appropriate chart to try to identify sticking points. And the instruments that I would go longer than that would be things that are like the S&P. If you look at this dome right now, let's just watch it for a moment. You watch it tick up and down. This is looking at crude. But you watch the levels, they're very thin. None of these levels that have triple digits, most of them 20, 30 contracts. And you see that banging up and down pretty quickly. You contrast that with the S&P, and you've got several hundred contracts at each level, and it's kind of volatile right now too, moving pretty good actually. You have several hundred contracts, and what you're going to find is that 10 tick is blurring by. There's so many executions going off, it's going to blur by to the point that you can't hardly keep up. The thing that I noticed, and I'm going to just switch this on my chart to a 1 range. If it trades like the S&P, I am surprised to say this because I've never liked range candles. But for the purposes of what we're talking about, I think it highlights it better than it would doing it with a tick chart. I messed around with it on crude, like at a 2 range, 3 range. It's still not as visible as it is on the S&P at a 1 range. So let's load that chart up with a 1 range. And here's what I notice when it comes to the little points that we define that we're going to be interested in. You tend to get little series of green candles side by side. This would be as opposed to doing a tick chart where you're going to have a lot of tails and dojis and so forth. It actually, for an individual that's trying to see it on a chart, you tend to have a lot of little green bars where it tests the lows and sticks, and you tend to have a lot of little red candles where it tests the highs and sticks. And for some reason, the little color shift right there, it almost kind of highlights it and makes it easier to see. So most of the trades, man, I think the majority of the trades are done on a tick chart, but this may be something that you want to fiddle with. I do think it makes it fairly visible. I've never really cared because I don't do this off the basis of a chart. But when I was looking at that chart, even with all the indicators and stuff that was loaded on it, I was like, man, it's kind of an interesting pattern that when you come in and do multiple tests, you end up with all these little green one range candles, 1 tick candles. For doing this, John, you asked, do I like 144 tick? For doing this, I would keep it extremely short. On the S&P, if I was going to do it on a tick count, I would do 25. Somewhere around 25. Anything that trades thinner than that, like if you're looking at the crude, the YM, NQ, 6E, most instruments 10 or 15 ticks. But the instruments that are thick in the book, when you see several hundred contracts per level, where it tends to chew at a level for a little bit, I would take that out. So that would be stuff like your treasuries, whether you're doing the U.S. treasuries, German treasuries, Euro Stocks 50, the S&P, the instruments that are big, thick levels, it tends to chew and print and print and print and print and print at a price. 1 range bill, basically each candle will be, let me expand this out. If you look at the candles, and let's just take our F3, if you were to measure these candles, well, actually, let me just do a cursor. You see the price over on the side? The low of the candle is 45.25. The high of the candle is 45.50. So for that 1 range bar, that would, on something like the S&P, that would essentially be the spread. Does that make sense? You don't normally have, like a 48 bid by 48.50 offer. Usually it's, 40 even by 48 quarter, quarter by half, half by 3/4, and so on. So if we see that print these little red highs, what does that tell you when it prints that several times? We don't know what the volume was in that candle. We can do a center click here, and that traded off 259 contracts there. See, on the tape, we would see the blur go through. We would see it print 47 half, 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 quarter, half, 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 quarter, quarter, half, half, half. And we can get an idea whether they're really tapping against the half, or did it just tick at the half one time and then it printed off 247 at the quarter. That's where I think there's a little bit of benefit to the tape if you can read it there. I have some concepts on this that I'm going to present later that will clarify this and make this easier to use. But for right now, when we look at these candles, we know that the spread was there on this candle at 47 quarter by 47 half, and we know while that spread was there that it printed 259 contracts. We look at the next time the spread was there, 12 contracts, so it wasn't there very long, ticked down. We look at the next one, 242. Now, Pete's summary tape would show a count of that, but unfortunately, the difficulty in doing this is by the time we're wanting that information, it's probably going to be gone. It won't be visible on there. But do you see what we're kind of getting at here with the range? If we rally up and all of a sudden it starts sticking and it tries to get through a level, this shows it very visibly. If we took this on a tick chart, let's just change this to the 25 tick. We'll turn on the global crosshair on both of these charts. You notice how the candles up here, it tends to be all red at the highs. Yeah, Kim, we're gonna go to global cursor and drive you out of your mind here. We may have two Kins in here too, so just if you know I'm addressing something for the new Kin, it's we're talking about the old Kin, so I shouldn't say the old Kin, the previous client Kin. So, but do you see how in some ways it can make that a little more visible? It's just a personal preference, so whatever you decide to do. Whichever method works for you. Yeah, ageless Kin, that sounds better. Eternal Kin. No, we'll come up with something for you here before the day's over. Okay, so anyways, let's go through this again. Two charts. 5-minute, and then we'll either use a 1 range or somewhere between a 10 and a 25 tick. If we get on a faster instrument, let's just switch this to crude. We'll let that load up and print for a minute. You see how the tick chart, man, I got to turn those cursors off in honor of Kin. Get rid of that global cursor. The range bar, these are going to be pretty jumpy because it doesn't tend to sit at one spread and print a lot. So, we may look at that at a 2 range. Try to consolidate it together a little better. Bottom line, if you completely blur them together, they're going to look relatively similar. They're going to mirror each other in terms of shape and so forth. But you may find that one way, especially on thicker instruments, that range may make it a little bit more visible. And as we go forward, when I'm saying it will make it more visible, we'll talk about what it's going to make more visible, how it's going to do so. So anyhow, 2 charts. One of them is going to be, for the purposes of what we're doing the next few days, it's going to be a 5-minute, and then we'll use either the range or the tick. Either way doesn't matter to me. Time and sales. You know, obviously for you guys, when we talked about using the time and sales in the past, I forget the percentages. 76% said they've tried to read the tape at some point in the past. And there's a couple ways of going about it. But to understand how this is going to help us highlight trades, I think it's good to understand what that is, what we're actually seeing on the tape. When we look at what the time and sales is showing us, this would be the built-in time and sales in your platform, in Ninja, in Sierra Charts, TradeStation, any time and sales you're using. You've got the information here, which is the time, the price, and the volume that was executed at that point. But one of the things that we've discussed with the bulk of you, not all of you have been through this, so I'm going to cover it again. So if anybody needs a 10-15 minute break that's been through this before, this would be your chance. When we look at that time and sales, the exchange engine is just sending us a print of the executions. And if I was to come in right now, and let me just freeze this. If I was to come in right now and place a market buy order for 100 contracts, that is not going to print 100 over here in green. We would never see that. It's not going to go 100. It will show how it was executed against whatever was in the queue. So just for purposes of talking about this, and Gerardo, I appreciate that. I'm actually at 46 minutes. I was not recording when I was trying to get the platform to load. I did not record that, so I appreciate the reminder. I think a couple of you guys had reminded me on that. I appreciate that. Right now I'm sitting at 46 minutes, so we'll give it another 15, and then we'll take another 5-minute break. But here's for purposes of this discussion, we're going to assume that inside of this queue with the sellers here, that is 11 different traders with one lot apiece. This is 13 different traders with one lot apiece, 29 different traders with one lot apiece, 30 traders, and 25 traders. And every single one of these is a trader with a one lot limit order. And so if I came in and I placed a 100 lot buy market order, let's just say for our purposes, I place a 108 lot market order, we would see 108 lines go by on the time and sales, and each one of those lines would be colored green. Each one of those lines would be for one lot. Does that make sense to everybody? Let me don't ask that. Is anyone confused by that? If you are, put a yes, you're confused. Whatever is in the queue, it's first come, first served. It's sitting in the exchange engine. It's waiting there. They're advertising that they want to sell. If I hit a buy market order, it's going to come in and it's going to hit all of these people, starting at the very beginning of the queue with the first one in. Whatever size he was, it executes against him. Next guy, next guy, next guy, next guy down the row. And so the end result of that is that on the S&P, where you have many trades go off 2, 3, 4, 500, 800, 1,000 lots, 1,500 lots. What happens if that hits a room full of us guys that are trading ones? It blurs by so fast we can't even see it. Extremely difficult to track the prices. They're just screaming by. But what we want to remember from this is that what's happening in that queue, or excuse me, in that time and sales, is simply reflecting for us what the executions were. Now when I get rid of this drawing, And we're going to look at these two time and sales side by side. And I'm going to show you the difference in speed. We're watching this on crude, which isn't that fast. It isn't that many big traders compared to something like the S&P. The difference in this time and sales, which this was developed specifically to try to slow the tape down and make it more beneficial, is it is reconfiguring the trades to say, and let me stop it. I'm going to wait for a fast blur. And guys, by the way, the reason I'm able to stop this, you'll see it in the videos. Most of you guys know, Camtasia has a screen draw feature, and so when I stop that to draw, it has to freeze the screen. Chandra, remind me of that, if you don't mind, when we get to the questions, and I will put that up so that you can get the correct configuration. In fact, I'll put that up when I stop the recording. I'll put that up and just leave that displayed. So I can stop this, and I look at these executions, and I obviously didn't get all of them. But we start down here, and we'll get a color, see if we can get something that will stand out. We start down here at 31 seconds, and we have buy orders that run all the way up here through 31 seconds. And then we see some sellers come in. But do you notice what this does over here? Those buy orders at 31 seconds. This would be this little section right here. Is essentially, it said that is likely made up of 4 different orders. There was an order for 3 lots, an order for 21 lots, order for 37 lots, order for 15 lots. Do you understand how that's beneficial for you new guys? Over here, we're trying to look at what the order size likely was so that we can slow it down. Whereas over here, we're seeing every execution. And so we want to slow this down as much as we can and still get the information. So for settings on this, and I am getting a couple questions on that. But for settings on this, let's just put this up to compare. What we're doing is I am consolidating the small trades. And there's a couple ways you could go about this. But I'm saying if this algorithm determines that these are part of one order, put them together, and then show it to me, but show it to me up to a size of 5,000 contracts. You could watch crude trade for the rest of your life. You will never see a 5,000 contract market order. So we can safely say that this is going to show us every print. But when the algorithm determines that this was part of a larger market order, it's going to put the market order together. And yet, if I come in and I place my 1 lot order, it will show that 1 lot order. Does that concept make sense to everybody? Chandra, that is not on Ninja. That is available. You can either get that through me, or you can get that through Jigsaw Trading. Either way, it's the same price. It's a very beneficial tool for someone who's trying to learn to read tape. Now, I could accomplish the same thing if I wanted to. I could say consolidate this into the large trades, and then show me every trade larger than 1 contract. It's going to give me the same exact picture. But the benefit, the thing that's going to do for me, is that is going to slow the tape down as much as possible, and yet still let me see all the executions. Now, I can't do that over here. And so on an instrument like the CL, I'm just stuck with whatever speed is. And the only way that I could slow that down, and let me get the properties window drug in over here. And by the way, you know, this will have the color settings. But the only way that I could slow that down would be to come in and change this to a filter of 2 and say, don't show me the 1 lots. But do you see the problem? Let's look at the amount of information that we're missing by putting that filter on there. See, our goal, and when we're doing this, the platform setup, the reason I'm going through this is just that if we're going to do this off the tape, it would benefit any of you guys to slow the tape down as much as you can while still seeing all the prints. See, the problem I have here, at any point, if I want to come in and freeze this, like I get these prints at 46s, 45, 46s, and then a 47. I get one print at 47, but look at all the stuff that printed off through here. Look at all these 47s that print. Here's 47s printing again. So I'm not going to be able to identify those sticking points by slowing it down. Now, would that work on the S&P? And I have to say, you could do that if you're trying to slow down the S&P, because there's enough transactions on the S&P, it will still give you a reasonable picture of where it's stalling, where price is sticking, which is going to be one of the key things that we're looking at as part of our entry setup. So whatever method you end up choosing, I would say a critical thing with it is, if you can't keep up with this, I mean, would you guys agree? There's a number of you guys in here that have the tape. Do you guys agree that that is extremely beneficial compared to the built-in? So that's, I mean, every comment is a yes. Yeah, yeah, exactly, Pete. See, this would just be something that I would say, if you're going to try it, there's some definite advantages here. It's definitely worth taking a look at. A couple reasons beyond that it can be beneficial for a lot of guys. You know, there's a lot of numbers blurring by. We can come in and change this in addition, and I can tell this. You know, I know that crude is trading at a given price. I know that the S&P is trading at a given price. If I had this at a 0, for example, on the S&P, you see how this puts the full price in? We've got all 6 digits of the price. Or I could come in and I could say, you know what, only show me 3 digits. I know it's at 1140 something. So all I need to know is it's at 775. It's at 8. It's 8 evens. It's printing 8 evens. It's printing 8 quarters. See, we don't need to see the 1148, and it makes it a little simpler. Very beautiful tool that way. Just for you guys that are sitting around bored, by the way, we're going to have a preview of Pete's new product over the course of the workshop, his new dome. And if you guys are interested, he could be bribed into allowing you to do some beta testing on it. You guys will, I think you will love this thing. You're going to get a kick out of it, but you're going to love this thing. We'll talk about that later. That's just a teaser. So if you're not able to attend the full thing, it will be in the recording. Anyhow, let's quit with this here. And actually, I'll show you one other thing. Let's go least significant digits. Let's change that to 2. I think reading the tape to scalp, to me, something like the YM or crude is considerably easier than trying to learn that on the S&P. So check this out. If we come in on the YM, let me find YM here. Look at the difference that makes on your time and sales. And by the way, if you want more space in your time and sales between columns, you can put more space there, tighten it down. But what do you guys think? You've got a price at 94. Do you need to see all 5 digits? It tends to screw with your head. Kevin, you're asking, is that the dome that tracks iceberg orders? The summary tape is the one that has the alerts on it. The dome has got some cool features. You guys will, I think when you guys see the features this has, you'll really like this. Pete, Mike wants to know, can you be bribed with beer, food? What is it going to take? So, yeah, Pete says testing and feedback. If a person is willing to give some feedback on it, that's what he's after, is somebody that's going to take it and give him some feedback. See, Pete is looking at this saying, what features do we need to put in? What can we do to this to make it better? Great ideas come from people that use it in ways that the programmer never thought about very frequently. So if you guys are willing to run it, give him some observations, give him a wish list, tell him what you'd love to see on it. That's what he's after. And before I forget and wonder why I'm screwed up for the rest of the day, get rid of my size filter on that time and sales. I was wondering why it was moving so slow. It's because none of the ones are printing. Okay, let's keep moving along. Let's see. I'm right at an hour right now. If anyone is going to miss something, please be assured, this will be recorded in its entirety, and you will receive a recording of that. But because we're going to be spending 3 hours a day or 3.5, I don't really care, whatever, if we take 3.5 or we take 4, it will be recorded. But we're sitting here for quite a spell, so let's take 5 minutes. Let's take till 10 minutes of the hour. Stretch your legs, get a drink. I'll reset the recording, and then we'll continue on here. In the meantime, if you have questions, go ahead and put those questions in, and I'll see those. We'll address them as we come back. Okay, let's resume here. A quick word about the time and sales properties, and just an explanation so you guys understand what we're talking about as we start reading it and looking at it. The time and sales is going to be, and I'm going to put this off to the side for a moment. The time and sales is going to be the opposite of the way we have our dome colored. On the dome, I've got this colored green because out of the corner of my eye, I want to see this. I want to be able to click in that column, and I want to know that that's buy. So I color that green because if I click in that column, that's how I get long. This one's red, obviously, because that's what gets me short. But if I came in and I clicked in this column to buy, that should show up in the time and sales as a green print, even though it got executed over here in the red column price. And we'll freeze this for just a moment. If I clicked buy market, that's going to come over here and it's going to execute against this at 03. And you would see that go from 12 lots to 11, and you should see a green print come through on your time and sales, even though we bought against this price. By the same token, if I sell, and I sell at the market, it's going to come over here, it's going to hit this, it's going to go from 4 to 3. I'm going to be executed at this price in the green column, but because I sold at the market, that will come in and print red. And the reason that we want it colored this way, it's opposite of the dome. We want it colored this way, and some platforms will color it backwards. But our goal, we want to see who initiated the trade. Was it a market buyer or was it a market seller? These limit orders will never do anything except sit there until somebody comes across and hits them. So for that reason, then, when we have the back color, you could make that whatever color you want it to be. Back color is irrelevant. You may like white or blue or green, who cares? But the four color for at the ask and above the ask is going to be colored green, even though we would associate ask with selling, because if the ask gets hit, it has to be hit by a market buy order. Now, if you color code blue for buy, then this would be blue, blue instead of green, green, whatever colors you use. Same thing at the bid or below the bid, that should be its own color. Now, this will vary considerably from the built-in settings, which are fairly confusing and ugly. But the goal is to minimize that. We don't want to have to think about it. If it executed off above the ask, if it executed off below the bid, we know that that typically will not happen in the futures markets unless it was just a delayed print, something like an artifact, because that spread is maintained by the exchange. And then we've got between. This would be a situation like where we sit right now, where there's no bid and there's no ask at 02. Now, if you and I both clicked simultaneously, I bought, you sold, both of those orders matched against each other instantly because they hit at the same exact microsecond. We're going to see a white print. And the other way that could happen would be a situation where there was one lot there and I hit it and there's nothing else there, and now there's a spread and it's saying, okay, that execution occurred at 02, but the bid is at 01 and the ask is at 03, then you would see a white print because that execution, it says, came in between these two. And bear in mind that color coding is done by your platform. It's not that's not part of your stamp from the exchange. The platform synchronizes and it says the bid and ask are here and the print came in here. That means the price was executed at this at this level. So those settings, whatever platform you're on, try to get it set up so that you can recognize a buyer and a seller. You know whether it was a market buyer or market seller that initiated the trade. Again, that is considerably different if you look at your color coding, the way the exchange would do it, or excuse me, the way that Ninja would do it. You've got all these multiple colors, difficult to get any information from. So we'll close that, get rid of that. Let me get a, actually I don't, we'll just use this version for the rest of our session. As far as the dome, not a whole lot we need to worry about setting up on the dome. Does everybody understand the dome, how it works, what it tells us? I mean, it's pretty basic. It's our order entry. We've got our ATM strategies for management where we can put our OCOs on there. Ninja provides a ton of free training on how to use that. So we're not going to go through training on how to use that because from that perspective, they cover it thoroughly every week. Couple suggestions and then we'll move on to our next topics. I normally would have my time and sales right next to my dome. And the reason, if I'm sitting here reading this column, trying to take a trade, I want to be able, if I'm getting ready to go short, I want to be able to sit over here and not move my eyes very far to click and place the entry. So for me, if I put the time and sales all the way over here, and I've got to move my eyes all the way across the screen to make sure I'm clicking the right level, I'm going to miss trades as a scalper. Now, while that's the case for somebody that's reading tape, while you want that right next to your dome, one advantage that a guy gets that trades off the dome, which is possible in some instruments, you can track the movement in some instruments. and you say, I'm going to take my primary cues from this as opposed to the time of sales, well, you don't have to move your eyes at all. But if you were going to do this from the chart, I would say one of two things. Get your time and sales on this side. Get your chart over here. Again, the right edge of the chart is the one that's moving. This is just a practical suggestion. You don't want to have to look very far to come over here. Does that make sense to everybody? I mean, it's not rocket science. It's just however you're going to be entering your orders. If you use the order pad, you float your order pad on top of your chart if you need to. But try to keep that close. If you keep that close, that's what's going to allow you to very quickly get the order in with a minimum of fuss. Now the other option is your chart trader. You can turn your chart trader on. In your chart trader, you've got your buy sell buttons. If you're going to do this from the chart, that would be your other option. Now, I will warn you, this is just my opinion, on the series of trades with the NQ where I did not use a dome, I have to say this sucks. And I don't want to bash Ninja. I like the big buttons, but I don't know, out of those trades, the times that I use those buttons, I swear to God, half the time I push the button, I get executed 2-3 ticks away because I couldn't tell that there was a spread there. I tell it to sell it against the bid, and the bid's 2 ticks down or 3 ticks down. And you can see that on the dome. You can decide whether you want to click and put a bid out there because there's no offer, and you can't see that here. So in a sense, you're kind of flying blind. Does that make sense to everybody? It's a nice feature to a degree, but you'll end up, if what I did is any indication of what you might do, you'll end up pooching yourself here and there on an entry. Other options that a guy can do, and again, we're covering this as part of our platform setup. This would be options that we can do to try to expedite getting the order in when it's time, which is going to be very critical. I actually, just so you guys know, the recorded trades that you guys get to view, you're going to see me get stops. You're going to see me miss 4, 5, 6 entries. It happens. And so, if I'm recording a session, this is what happened. Couple other ways of going about it. You can right click on your chart. Wherever you right click, let me put on my crosshair. I'm at 11,028. You can see that at the right side of the screen. And if I right click, you'll see that I can sell 1128. I can put a buy stop at 1128. And that would happen wherever I click. If I click at 1121, I can do a buy limit, can put a sell stop, that will go in at 1121. Again, the disadvantage of doing that, it does not show me what's there. It doesn't show me what's available. So I may click, and the last print that updated on the chart could be at 1124, and I think that's where price is, and price is at 1119. There's been no executions between 1124 and 1119. I think I'm going to get an execution and nothing happens. So it's a nice tool, but just be aware it has some limitations. Another way of going about this, and you could do this off the chart. Let's say that I click down here, and let's say that I want to sell if we break through this low at some point. I can put a sell stop down here at 11,003. I can click that, and I can move this up, and when I'm getting right there, when my entry is just ready to fire off, I could say I want to sell this if we get 1 tick below this price. And if that's the case, I see it form, my setup's complete, I click, my order's there, you can see it immediately come over the sell stop in the dome. Now when you do that, keep in mind that if you don't have a strategy here with an OCO, when it's executed, you won't have a strategy. So you would want to turn on whatever strategy you're going to use that would allow you to have your stop, your take profit orders put in. Put your sell stop here. You move this up, set it underneath the price. Say if it moves down, sweep me in. That can be a very effective way of doing this, especially if you're trying to trade off the chart. Is you know you're going to the short side, have the order out here, have it down below where you're not going to get hit. Click it once. Just be ready up here. When the setup triggers, it's time to go short. Click, your order's there. That stop entry, you get swept in. Boom, you're hit on the way through. Your stop is up above us here. If I click on that, I can bring it down. The take profit is down here. You're swept in. You're ready to go. You can drag it around on the chart, get to break even. You're scalping. Boom, take it off. You're done. Does that make sense to everybody? Yeah, Jeff, your question, do you use or like the stop limit so you don't lose a lot of ticks in a fast-moving market? Some exchanges won't accept them. Some do. It's I normally, if I was trading crude, and actually let me just show you the settings that I've got. You guys can look at this and adjust it later to match if you want. The settings that I've got on here, you've got use stop market for stop loss orders. I've got that set to false, but some exchanges do not allow that. Stop market. If, I didn't set that to true, to just use stop market period. So like they say for CBOT, Eurex, FX, they don't allow a stop limit order. They only allow stop market. So even if you set that to be a stop limit, it ignores it and submits a stop market. The other setting in here that's going to be critical to my style of trading, select active ATM strategy on order submission. What that does is it allows me to scale out, and when I'm done and I'm flat, it resets to the original strategy. And in the meantime, if I come in, excuse me, let me just demonstrate this. If I come in and I put on a 6-lot trade, let's say I come in, put in a 6-lot short. And again, guys, this is on Sim. You can see it is on the Sim account. So maybe I'll put in a 6-lot short. Okay. So now I can come in and I can change this to 1 contract, and I can just put orders out here in my DOM. If price would cooperate and move down, you would see that would automatically deduct from this stop and from this eventual target. That is part of that select active strategy on order submission. You definitely want that to happen if you're going to be scaling out, because otherwise you're going to be stuck. Your stop is still at 6 and you've only got 1 contract left. Your target is still at 6. Does that make sense to everybody? If I'll just take these orders and drag them up and execute it. You see how that changed from 6 to 5? Drag another one up, execute it. It goes from 5 to 4. That is part of that setting. Get rid of those. Okay, so is everybody, as far as settings, we've got the basic workspace, the reasons for the workspace, and now we need to know how to put that to work. If anybody has additional questions on that, I would say email me. You can either email me or you can put the questions out during a Q&A session. But that is going to basically be the simple workspace we need. We're not going to use indicators, not going to use moving averages, not going to put a bunch of junk on there. We're just going to keep it very clean and so forth. Yeah, Chandra, I would say that I'll bookmark that in the video for the settings. The other settings are basically just color settings, and I color it based on personal preference. You may or may not want to do that. It's easy to do, and you can't really mess it up. if you come in there and completely hose something in here, worst case, all you do is hit reset and it takes it back to the factory default properties. So I've custom colored the ask price, the bid price, the buy column color. Actually, I guess the ones I've custom colored are the ones that are in numbers. So just basic settings, very, very simple settings. Okay, so let's, is there any questions as far as the workspace itself? Anybody not understand what we want, what you need to set up, later today, or if you haven't done it already? If you have a question, just type a Y. Otherwise, we'll get rid of this and move on. Okay, so I will let me just get rid of this stuff here for a moment. Okay, there are let me see, Chandler, you put a question in. You said you use a 2 range for YM and ES and in Q. No, if I was going to do that on the ES, the 1 range shows really clean. If it's an instrument that's a little more jumpy, where the dome is very thin and the price, the last trade jumps up and down, the bid-ask spread jumps up and down a lot, you may look at a 2 or 3 range, see if that shows it a little more clearly for you. Okay, let me, I've got to resize something here. 4 steps, and I've asked this as a question. Is this really, is there only 4 steps to success? There's more than that. But to successful scalping, the steps that we're going to look at, the mechanical steps, is we're going to define it as these 4 things. We stock the trade very quickly. We execute the trade, make whatever management decisions we need to make, because the majority of the time we will be in the trade a couple minutes. Be realistic with it. And then we turn right around and repeat it again. And if I could take scalping and define it down to its most simple essence, that's what it is. Stock the trade, execute it, manage it, repeat it. Stock it, execute it, manage it, repeat it. Now the same thing happens with intraday trading. That's my mentality. But we're going to go about it completely different. So over the next couple of days, part of the information that we're going to look at is going to be, which is a key part of that, is stalking the trade. How do you go about it? The execution, that will vary depending on your market, your instrument that you're trading. If you are trading the S&P, would you guys feel relatively comfortable using a market order on the S&P? I mean, for you guys that trade live. Got a yes. Yes. See, I would. I know that on a market order, I typically will get filled where the price sits right now, unless it just so happened that it was getting down there 10 or 15 contracts at a level, and I put the market order in and it moved at the exchange before my order hit it. But I know that probably 95 times out of 100, I will get the price that I think I'm going to receive. If I'm staying away from news, if I'm staying away from times when the dome is thin and there starts to get a spread in there where nobody wants to step in, I know I'm going to get the best price that I can possibly get and still count on the execution. Now, the execute part of that, and the reason I'm jumping to this before the stalking is going to take considerably more time to go through, but the execution part we can cover fairly quickly. What do you guys think for experienced traders? Limit orders for an entry on the S&P as a scalper, you think it's going to happen? You're going to put a limit out there, you're going to bid for this, there's 2,000 contracts in front of you. I will tell you this, My belief, and let me tell you what some of the guys that trade that I know that trade and have some experience. Uh, Gerardo says sometimes you will miss the trade, and that is very true. Mike says it will take forever. Very true. But I will guarantee you this: my gut feeling, if I put a limit order out there on the S&P to enter, unless I'm just waiting for a retracement. If I'm looking at it and I went in right now and I say, well, I'm just going to put a limit order. If I get filled, to me, I says kill the trade. I won't get filled unless it's going against me. Do you guys ever get that feeling? Experienced traders, every experienced trader I ever talked to on the S&P said if you get filled on a limit on the S&P, when you're trying to get in right here, right now, and you put a limit, get out of the trade. If you want in that trade, if you should be in that trade, you ain't going to get filled on a limit. There's no way they're chewing through 2,000 contracts in front of you to fill you, and then you're still going to be right. So for that reason, then, the way that you execute is going to vary depending on the instrument you trade. Would I use a market order on crude? What do you guys, experienced crude traders, would you agree with me when I say no pick and weigh? Would I put a market order on crude? I mean, if you want to get slip 15, 20 ticks, go for it. But you do not put market orders on crude. So, you look at that and say on crude, it can be relatively easy to get filled on a limit. There's only 3 contracts in front of you. It wiggles around. You'll get wiggled in the majority of the time. But don't you be executing at the market if you want to make money as a scalper, because you may be getting in where you had your potential target. So we went through a couple of different methods of executing that. Dragging that limit order around, dragging the limit order. Let's say we've got a bid, dragging that limit into the ask. In the exchange's eyes, that converts that to an instantly executable order, and they'll execute it at that price if they can. You know that you will get the fill at that price, or you will be left with a limit order sitting there that didn't get executed. So there are several ways of doing it. My preference when I trade the S&P, my preference is hotkeys, and I've got hotkeys set up on the keyboard. When I went to entry, if I want to buy, I hit Alt B. I want to sell, I hit Alt S. If I want to close the position out, cancel all the orders, I hit Alt C. You can set up hotkeys to buy at the bid or ask. You can set up hotkeys to sell at the bid or ask. But I typically just use those hotkeys: market order in, market order out, and a hotkey to close. So when we do this, I would say, and you guys will witness this on the recordings, one of the most critical things is to believe that what you're going to do is going to work. Because let me ask you guys, what will happen if you don't believe it will work? If you're pretty sure it won't work, if you don't think it will work, if it's a 50-50 doubt in your mind that it will work, what will you do? Exactly, Mike. You're going to hesitate. And if you hesitate as a scalper, you're going to spend a lot of time staring at a screen without doing anything. So however you choose to execute, you need to be able to do it quickly. You need to be able to do it accurately. You need to be able to do it safely. All 3 of those things are going to be critical to success. You know, that requires, to a degree, knowing your instrument, knowing its tendencies, watch it jump around, pay attention to your fills. If you find yourself, like for example, where I was trading the NQ, which I would normally trade with either hotkeys or the dome, trading that on this video without the dome, without the hotkeys, taking it off the chart, using the chart trader. picking every execution is 2-3 ticks away from where I thought I was going to get filled because I can't see the book. Doesn't work for me that way. But if I use that same entry method on the S&P, it'd be fine. I know the spread is one of 3 prices. I can see where it prints, so I know the spread is either 1 tick above it or 1 tick below it. And if I could read tape and I'm watching the time of sales, then I know where the spread is because I can read tape. But even looking at the chart, I know worst case I get executed a tick away. So know the instrument, know what it's like. Pay attention to that. If you find that you're putting market orders and you keep getting slipped 3-4 ticks, you can't afford that if you're going for 8. You need to be aggressive. You believe in it. You get it in there accurate. Get it in there early. Get hit. Be done. If you find that you're using the stop entries and a particular instrument, all of a sudden you find that you keep getting slipped 3-4 ticks. You're going to have to take that into account. Take that as part of your trading plan. Now the third step here, which is the management, and I'm skipping the first one for now because we're going to talk in depth about how to go about stalking it. The management is going to depend up to you. That is the one area that you're going to have to decide. Are you going to be a one-lot trader and you go in, you've got a fixed target, you just wait for it to hit. You either get stopped or you get your profit. Are you going to actively manage that? If it gets almost all the way there and it stalls, are you going to kill it? Those are decisions that you have to make. You have to track. You have to see if there's a flaw, something that you can improve on. When you watch through the video, you will see my thoughts on management. But keep in mind, that's just my thoughts. It's worked for me for many years, but I will be the first one to tell you it's not the only way to do it. But the management of that trade can be very critical to success. I know that none of you guys, I won't even ask, because I know that nobody here has ever been upside down in a trade for 8-10 minutes and came back positive and bailed out with a tick. See, we don't do that. We know better, right? But you think as a scalper, what's going to happen as a scalper if you're very close to a 1-to-1 risk reward, but you find yourself bailing out frequently with 2 ticks because it was 4 ticks against us and we had a 6-tick stop. And then we say, can't go broke taking profits. That's the axiom, right? Can't go broke taking profits. But your management doing that will probably put an end to the account at some point. Moving stops away, not honoring the stops, doubling down, whatever you choose in terms of management, it's going to be make it or break it for you as a trader. So you will notice as you go through the recorded trades, you've got 4 hours. As you go through that, you're going to see the principles that I use, and I will comment on other ways that a person could go about it. But you will find some consistent things. I am not content to get worse than a 1-to-1 reward to risk ratio. I would rather be at a 2-to-1 or a 3-to-1 reward to risk. And so if I see the potential for that, if that means it went from a scalp to a short intraday trade, I don't really care. I'm not going to get bent out of shape about semantics. But if I look at that and I've got the potential for 25 ticks or 30 ticks, even though my initial, the majority of the time I would only go for 15, I'm going to go for the 30. If I see the potential for that. So pay close attention to that, and I would say the one key thing, because this is something that you're going to have to do. There are many ways to do it. Keep track of it and see, are you bailing early? Do you have any bad tendencies there? Are you the nervous Nelly that just bails out anytime it looks like it's going to tick back against you? If you choke it out, are you choking it out at least a 1-to-1? Do you trail stop it down or not? Make those decisions, track it, see how it works, see if you could improve it, see what the hypothetical result would be if you did it differently. I've always advocated doing that. I've done it myself many times, and that is to come in and say, I killed the trade. I got out of it with 6 ticks. My goal was 10. I watch it, look at it half an hour later, whatever it takes, and then I write it down in my journal. Would have got the 10. That was how I broke that tendency to bail out with half of the target I was going for. So keep track of those things, make those decisions. Once you do that, you have to be able to repeat those steps over and over and over. And again, the way that I recorded this, the video that's going to accompany this, my goal was to just sit down and trade a session and record it. And like I mentioned earlier, you will see situations where I'm already telling you this is going to be my next trade. I'm not even out of this one yet. I'm looking at it. My gut is telling me I'm getting stopped. I know I'm getting stopped. And I'm saying if I get stopped, I'm going to immediately re-enter right here. Boom, I get stopped. Boom, I re-enter. Repeat it. That's what we do. So you're going to have a learning curve where you prove that to yourself, build that confidence so you'll be able to do that. That could be difficult to do. So we'll talk a little more about that later, about a couple of ways to do that with less money on the table, less risk to yourself financially while you learn to do this. It is important to take care of yourself that way. Minimize the exposure that you have. Now the first area here, which is going to be stalking the trades, we're going to go through again 3 ways of doing this, and they all kind of hinge on the same principle. So this is going to be the bulk of our discussion tomorrow. We're getting close to 3 hours here today. I still want to do some time for question and answer. But what we're looking at, again, on these perspectives, when we're stalking the trade, is how we would go about that using the time and sales, how we would go about that using the DOM, how we would go about that using the chart. The execution part of it, that's relatively simple, pretty easy to do. When we come to the management part of it, again, that's there's many factors. Part of that is choosing the targets. Part of that is seeing that before the trade's even put on. But the stalking the trade, deciding when to pull the trigger, that is going to be a key component of success, as you guys no doubt are aware. So at this point, I think what I would like to do, we're running a little behind, in part because we got started 15 minutes late with the technical problems this morning. But let's do this. There was a couple other things I was going to go through. I'm going to just put this up for the time being. If anyone has any questions, put your questions in there. And then I've got 3 additional polls that I would like to do. And you guys either can do the questions or look at the polls. One of the things that you guys may face, and I can actually see the results as people are voting. I can't see who voted how. But one of the challenges that you'll face as a scalper is trying to call that short-term direction. And would you guys agree that that's probably one of the toughest things in trading? I mean, if you knew the direction, then everybody would make money trading, right? I mean, to me, that would just make sense. If I knew the short-term direction, well, if I knew it was going up, I'd buy it and I'd make money. If I knew it was going down, I'd sell it. I'd make money. It's easy. Some people feel fairly comfortable with that, picking that short-term direction. I have heard some interesting comments about it. A number of different brokers have talked about that, and I've heard that from several experienced traders that had observed others trading, and they said they felt that even most new traders could, they could pick the direction, but what do you suppose they thought their trouble was? They were right on direction, and they were wrong on something else. No, not stops. They're right on direction. Exactly, Mike. Al, you guys got it. Timing. They got the direction right. Timing stunk. They knew it was going down. They got in too late. They got in too early. So when I look at this, and let me just close this and I'll put the results up. We've got 53% said yes, they feel comfortable. 7% said no, they don't feel comfortable. 13% said rarely do they feel comfortable calling a direction. 27% said most of the time they feel comfortable. So that's a good thing. If the majority feel fairly comfortable calling the short-term direction, that's excellent. It's a good first step. Let me ask you this. We'll put up another poll related to that then. If the majority feel comfortable at least some of the time, then how do you choose the direction? Now, if you can select more than one, but if there's another method you use to choose the direction, just type that in the GoToWebinar in the chat window. And I think you guys will benefit from kind of looking and hearing what others use, and then we're going to talk about it tomorrow, how to tell that direction fairly accurately on a very short-term basis. I'll leave a minute on this one because it's, for some you may be typing. And Pete, when you asked what do I mean by short-term direction, as a scalper, you know what's happening right here and now. What do we expect for the next 3 to 5 minutes? What direction has it been moving for 3 to 5 minutes? What potential do we have to continue? I mean, I don't really care. To me, if I'm scalping, I don't really care what it's going to be doing in 2 hours. I care what it's going to be doing in the next 5 minutes. So how are we moving right now, and is it likely to continue that direction? So Jeff, you use your eyes. Are you just eyeballing the candles? I've got others, some other comments here from ones that are typing in other comments. Some say they use the time and sales. Some says a combination of moving average, previous support resistance, and price action. And Jeff, you're doing that just eyeballing the candles. That's what I kind of mean, is like looking at the bars. You're looking at the price action. You're not running stuff on it. I think we've got, for the ones that are voting, we'll go ahead and give 10 more seconds. I'm proud of you guys. Okay, so I'll go ahead and close this. And we'll share that. As you can see, 3/4 are using the candles. Whether you're using open, high, low, close, candlesticks, whatever the bars are. That is, to me, it's the best way. Be able to just read the candles. What's it doing? I would rather see that it's been down 7, 8, 9, 5-minute candles in a row and starting to leave some tails at the bottom. Would I choose the current direction that I should scalp? I'm saying the current direction is down and it's going to continue down enough that I can scalp to the low side. No, I look at the candles and say, man, I'm 9 candles down with no pullback and I'm starting to leave tails at the bottom. The current direction, yes, it has been moving down, but I can't see it, continuing enough to start scalping to the downside now. Indicators or moving averages. Moving average can be a simple way of looking at it. For some reason, and I've always kind of wondered why, most traders that I've ever talked to, at least early in their career, they could see that the moving average was sloping down, but they couldn't see that the price was. And that always puzzled me. Um, to me, it was like, hey, the candles are going down. They're closing, they're red. It's I don't need to have a line going down to tell me it's going down. Uh, some people prefer that. No harm in that if you use that, if you can accurately determine that. Trend lines, 38%. Um, Trend lines, I think, very, very valuable to me. I usually don't draw them. I usually do it mentally, like most things. But trend lines, very important. Linear regression channels, I've known a few people that did that. Took like a little 50 period LRC, let it auto update. Some platforms that will auto update and move for you. And they were always looking at that to determine direction. So looks like somebody has used that. And then for other things, which I already mentioned, was the time and sales, just eyeballing the chart, a combination of moving average, previous support resistance levels, and price action. Jeff, you say a manual trend line often. Okay, so those are effective ways of going about it. I would comment this for those that are using indicators and moving averages. If you can transition to seeing that from the candles on the 5-minute chart, you're probably going to be in better shape as a scalper. And the reason for that is that moving averages and indicators lag. If you're watching the candles, you'll notice those exact scenarios I just described, where price has moved down an extended amount, and you just run out of target to the downside, and you say, I've got to take scalps to the short side off the table. Can't keep doing it. That may be the direction. It may keep right on going, but at some point, you look at that chart and you say, I can't see the target. Well, if you're using a moving average to determine that, it can be kind of tough to see. It's just sloping down based on the price action of the last 20 candles. So as we go through this tomorrow, pay close attention to that information on determining direction from the candles, and whether we're going to use the time and sales, the short-term tick chart, or the dome, determining that as well from the dome and the way that price is behaving. I would say that if you can read that from the time and sales, and you've got in the back of your mind the big picture, that's as good as it gets. Man, you know short-term direction if you could read that on the time and sales. So let me close that. I think I've got one last slide. No explanation needed. I just ask people to be honest with it. I don't know the background of some of you that just joined us for this event, if this is your first event. But that is going to be a stumbling block for most people that fail. I'll be very honest with it. It's not the method. It's not necessarily your analysis, but it's going to be doubt. I think for you more experienced traders, you're welcome to sound off on that. We've talked about it a little bit once already, but I'm just kind of curious how the room feels in general. We'll give another 10 seconds on that for a vote. Anybody want to guess on this one, what the results are? We'll see how optimistic you guys are. I got nobody that even wants to guess. We're not optimistic at all. Yeah, Mike, that sums it up. Mike says we're here for a reason. That's hilarious. If you believed, yeah, absolutely. And James, I appreciate that. You say that's been your greatest stumbling block for years. Well, Jeff, that's exactly where I was going. Let me put the results up. What I was going to say was that half of you tell the truth. So that's rude. Jeff Jeff says, "How many liars are there?" with a smiley face. But that's the way it goes. It's when you look at the trading, for most individuals, if they truly believe in the method, they're probably already successful. And I would say that it's more important to believe in yourself and your method than it is the actual method you use. I mean, you say long trade investing or long-term investing doesn't work, look at Warren Buffett. You say scalping doesn't work, look at Paul Rodder. You say intraday trading doesn't work. We could find a ton of examples that make a nice living intraday trading. So that's something that as we go through this, you guys will have to go about proving to yourself, convincing yourself that this is going to work, that you can believe in this. And I would just say, just for right now, purposes of that, one of the most effective things a person can do is stop looking at trade by trade. The next trade does not matter. If you start scalping, and let me just I'll close that. If you start scalping, is this next trade that you're going to take, is it even going to matter 4,000 trades from now, next year? It's irrelevant. The next 5 trades is irrelevant. If the method, if you're seeing scratch with it, if you're just breaking even, that's promising. Because with a little bit of management, a little bit of fine tuning, that's where break-even trading goes to profitable trading. James, I appreciate that. You say you're doing better since my instruction. Appreciate that. Chandra, am I saying your name right? Is it Chandra or Chandra? Is it like SH or is it like a CH? Chandra. Okay. You say question on time and sales. What is the filter if you want just the small cars only? Now you're talking on the jigsaw trading version, or are you talking on the built-in? On the built-in, there's not a way to filter that just to see the small contracts. You can filter it, and again, the drawback to that is that it eliminates being able to see a lot of the prints, so that it slows it down. But if you set the filter to 2, then it says don't show us the ones. You can't reverse that on the built-in and say show us only the ones, if that makes any sense. You can't on the built-in do what you can do on Jigsaw's version. On Jigsaw's, that's where we're able to come in and say put it together into the orders that was actually sent to the exchange rather than the executions. Now you can open as many as you want, but it's not going to do you any good. See, here's the problem, and let's just go back to the. Let me get my PowerPoint ended here. So come over here. We'll go to the S&P. Take our time and sales. We go to properties. Sorry, I've got so many windows open. Go to webinars, just a sloppy presentation platform from the viewpoint I have. Size filter, let's go to 50. And we set that filter to 50, and here's the problem. And we're talking about the use of tape in a different way. You notice how we've had all these executions going by, but nothing has shown up here yet. And the reason for that is that there are no limit orders in the queue that are larger than 50 that are getting hit by market orders that are larger than 50. So when we start looking at this perspective, we can slow it down. I mean, we slowed it down to the point that we're not even getting prints. See, here's our first one, where there was actually a 50 in the queue and somebody hit them with a 50. We look at that and we know that that one was right because look at it on both time and sales. This was not a 200 lot that had a 50 in it and another 151s. This was a 50 that was hit by a 50. Or the other option would be there was a 200 in the queue that was hit by a 50, and then that what was left of the 200 was hit by a 1 and a 1 and a 2 and a 1 and so on. So if we use two of these, where I have recommended using two of these in the past, first of all, was prior to this new time and sales. But it was always done with caveat that when you come into that, and let's just open a second one to answer your question. And guys, just to let you know, as far as other information today, I'm not going to go through anything else. I was planning on getting into some stuff, and we didn't have time. And I don't really want to get into the stalking the trade part of it until tomorrow. So if anybody wants to split, I'm going to answer a few questions here. So we take these two time and sales, we put them here side by side. Let me get that where it's on the screen, somewhat reasonably neat. And if we were going to try to find a big order, somebody that had placed a truly large order, you know, a 200, 300, 400,000 lot order, we would be very hard pressed to do that with the time and sales just as it sits. See, this is blurring by, and there will be periods in time, and I'll stop it next time we get a big flurry. Actually, let me move these over, and we'll put the new time and sales next to it here. But we're going to watch for a big flurry that clears this whole screen, and then I'll freeze it when that hits. When you look at this whole screen, we don't have a clue how many other lines just went by at 45 seconds. All we know is it blew out our whole time in sales. And yet out of that whole thing, look what we had, is this only showed 250 lots. And so we really have no idea whether that was 1,000 lots or whether it was 100. All we could do was guess. So in the past, what I looked at is I said two things have to occur for me to know that this was truly a large order. And this is a different use of the tape than what we're going to do scalping. We come in here and say, first thing that needs to happen is we need to see this entire time in sales go at the same second. And we want to see a mix of double digits, hopefully triple digits, ones and twos. We want to see that drop into view instantly and just blur by. Now, all we could do is guess, because if it went past the bottom of the screen, we don't know how many lines. It could have been 200 rows past. At the same time that we saw that, we would want to see over here on the filtered side, I would want to see 10 or 12 lines drop in, or 15 lines if I was filtering this to 30. If I was filtering it to 50, I want to see 4, 5, 6 of them drop in. And when that happened simultaneously on both sides, that said to me that was an order that I can safely say was 300, 400, 500 contracts. That's a big player to put a market order that size. But you notice at the same time, what happened over here is that broke that down. Even though these occurred at the same second, it broke them down as separate orders. and we can just tally it up very easily and say, okay, that's what came in. And so for guys that are going to try to do this on the time and sales, Chandra, I would say it's almost a necessity if you're going to do it. It's the best investment you'll ever make is this time and sales. And guys, so you are aware of it. If I sell that time and sales, I actually lose money. And I still say that. I still sell it to you for what I pay. I eat the credit card processing fees on it. I lose money. I sell that, I lose $5-6. And Pete's here, so if you guys want to cuss him for me, no. But see, guys, it's just the point of this. If you're going to do this and you think you want to do it from the time and sales, play with it with your built-in if you need to. Um, you can get a demo there. Pete, is there any way? What are you doing as the demo? Is that still 5 days, or did you set that out 7 days? Okay, so that way you could play with it regardless of when you start it. You could play with it for a full week. So look at it and see what you think. Now, when we start on this tomorrow, for some of you guys, you will know kind of where I'm going with what we're looking from the tape. We're not looking at this to track the big traders for scalping. We're going to be using this different, and you will see the apparent, readily apparent advantage of using the new time and sales. Chandra, your question, you say after that, is it monthly or do you own it? It's a one-time payment. You own it. It's a lifetime license. Now, Pete's kind of ruthless with it because he calls it a lifetime license, but I notice it expires in 2099. So I don't know if he's trying to cheat us out of the golden years of our trading or what he's doing. But apparently in 2099, if you're still alive and trading, you're going to have to get in touch with Pete's grandchildren and ask them to extend it. So Pete says if you guys want to trial for this week and next week, he's willing to do a 2-week trial. For you guys that don't have it, if you want to do that, you can send me an email or you can go to Jigsaw Trading. You can download the trial there. So Chandra, does that answer your questions as far as the built-in time and sales? Okay. There's going to be some limitations. It's still doable. It's going to be harder on the S&P than on most instruments. It's going to be the easiest on the YM of the major futures contracts. The YM is just one that to me it's always been a fairly easy read. It moves at a decent pace, easy to see the numbers, skips around nice. It's fairly easy to learn on compared to the S&P. Let me do this, Chandra, or anybody else that wants to do that. If you email me here, I will give you a link. And Pete, would that be best if I just had them contact you? If you're going to give them a custom, if you're going to extend that to 2 weeks. I mean, I was just trying to think of how you're going to track that, because if they go in, will you be able to see that in Ninja's console, like anybody that signed up for a trial, or do they need to get you a machine ID? And I was just trying to think of how you're going to do that and extend it. So they'll need to get the 2 weeks, though. Will they need to contact you to let you know that they were in here and that you told them 2 weeks? Okay. So guys, just send me an email. Get your demo, and when you do the demo, there is Pete has the process detailed. You get your machine ID. You can just submit that right out of your platform with the pop-up, and when you send that email to Pete, just put a note on there that you're here at the scalping boot camp, and then that way he can extend that expiration date out for you on the trial. Well, as far as questions, I don't see any other questions that I haven't, looking back up through. For tomorrow, and we're going to add one thing to this. For tomorrow, what we're going to start with is we're going to go through the basics of stalking the trade. And we're going to talk about that from the time and sales. We're going to talk about that with the chart. And then for a great deal of the session, probably after the first hour or so, we're going to just sit there and look at that at live markets, live instruments. Practice, call it out, ask you guys to call it out, and so forth. So for Thursday's agenda, that's where we'll kind of get into the dome. We'll comment on that a little bit tomorrow, but we'll get into that in the dome as well to try to tie that together. Mike, you asked which markets. It doesn't really matter to me. I think for the benefit of the new attendees, it probably would be easier to do something like the YM, something that's going to it's going to be a little easier to read, a little easier to focus on the numbers. My chart background, Ken, that is silver. I think that and the Ninja, you've got a couple ways of selecting colors. I don't know, where did my chart go? Color for background, silver. No problem. I've kind of torn. I've always liked a black background better, but the black background, I have been told many times, does not transmit very clean through screen sharing. And so I ended up trying to make myself get used to silver. But, you know, staring at a monitor, it fatigues your eyes. I tell you what, man, when you're using white all day, my eyes, it just burns. And I was trying to find a combination that didn't burn my eyes. You know, black by far is the easiest on my eyes. I wish that I could change the color on the dome and change that to black. Yeah, I use black on the background on the time and sales also. I would prefer to have everything black so that there's minimal light shining on my eyes. John, you say, can we look at the 6E? Yeah, not a problem. You'll kind of see that what we're going to do, the similarities are there, where once you understand how to do this, it's the same basic thing on any instrument you go to. The difference from instrument to instrument is going to be the size of your stop, what you can actually get out of it, what kind of targets you can get. Chandra, those vertical lines are called session break lines. On the session break lines, you've got, I guess, a couple things you need to do. You can double click on your candles, but you have to have a session of some sort, and this one is a template that was set up for grain. So I've got this session template, I've got this set to 630. And you do that out of your control panel, out of your control center on your template manager. And so this is, let me just show you that, since you may be newer to Ninja. But you go to your control center, you go to new, and you go to session manager. And in that session manager, that's where I've got these templates set up. So I've got this template. It starts at Sunday at 12 p.m. It actually won't draw anything until we start getting prints, you know, when the Globex session starts Sunday afternoon. and then that will run through to 6:30 a.m. So when you look at this on the chart, that's these two lines that are closer together. That's going to be our Sunday Globex session. And then this line where my cursor is, or I guess I could screen draw on it. This line here, that is going to be corresponding to this line here. Whoa, that don't show up. Let me get red. That would correspond to this 6:30 a.m. Monday. This line comes in 6:30 Tuesday. So it's basically just breaking the session down into 24-hour segments, and it's putting a vertical line at the beginning of the session that I've determined in here. And then to turn that on, let's see, we've got to come in, double click on our price, or we can hit Control T. You come in, plot session break line, we say true, and then that plots that vertical line right at the broader market open. Nice little feature in Ninja. I like it just to see what was yesterday's high. It highlights yesterday real easy. Jeff, you're saying, can we look at Forex as well? Is that what you're asking? Because Forex, if you're talking spot Forex, it does not have time and sales. There's not a central exchange. If you look at that on the 6E, which would be the euro currency future, that is correlated extremely tightly with the euro US dollar spot Forex pair. So your price will be slightly different. You may be 4, you may be 7, you may be 10 ticks away. But if you see the market entry on one and you took the market entry on the other and you simply set it to go for 10 ticks, it works fine. When one breaks, the other breaks. One rallies, the other rallies. So you can't read Forex directly, but you can read the currency future. Now, where that's the most beneficial, there's only a couple pairs I would do it on. The 6E is going to be the best. That's the one that has the most volume. You know, you've got more volume than you do on the YM even. If you go to the 6B, the British pound, that one will have enough volume. 6J, Japanese yen, that one will have enough volume. But once you get outside of those pairs, it gets pretty dicey. Ken, your question, do you know how to save live DOM and chart trader properties in a workspace? If you were going to do something to your DOM, you have to come in and you set your properties, and then once you've got all your properties set the way you want it, you click Set Default. That's really the only way that you can do that. Once you save the workspace, you've got a couple options. You can tell this to always default to these settings. And then we open up our workspace and we create it. The one thing, and you can set it, but it seems a little inconsistent. And let me find it here. I've got to figure out where it's at. Give me just a second. Oh, you mean strategies? Okay, I thought you meant when you say properties. In terms of saving those for a workspace? So like you're saying that every time you open this workspace, you want it to default to a 20 by 20? I think all I've got on that, if you set that up, I'm trying to think. When mine starts up, it always has whatever strategy I closed it with. Sounds good, Pete. We'll talk to you later. But I'm trying to think, when I open a workspace, it opens up whatever I saved it as. Yeah, the chart trader doesn't. Chart Trader always defaults to none. The dome seems like it always saves whatever strategy I had in it. Well, guys, let's wind her down. Tomorrow we'll have the the bulk of the instruction for the for the methods that we're going to be using, and it will be recorded, it will be bookmarked, and when the event's all done, we'll be sending that out to everybody. When I'm done today, and I've got kind of a quandary, I need to render the scalping for income video, which is the live trades. But if I render that scalping for income video, which will take a few hours, that's going to kill Camtasia so that I won't be able to edit the recording from today and produce it. So what I think I'm going to do, I'm going to have to just make a decision on it, is the recording of the entire thing I'm going to just make available at the end. We'll have that on Friday. Thanks, John. Appreciate it. We'll see you tomorrow. But we'll have the recording as one download at the end, and that way I can get the rendering done. The problem, I'm just going to end up with a backlog. When it's rendering one video, Camtasia is out of commission, can't use it, and I do not have a multi-computer license. So on Friday of this week, you will receive the download with the recording of the 3 days. And then if everything renders out right, if I got all the corrections made, which I worked on, like I said, I worked on that till 2 o'clock in the morning and then back up at 5:30 to start for this morning. So if that renders out correctly, and I'm going to have to double check it to make sure that the time is synced up correctly with the video, then I will get that to you tonight. If not, I will get it to you, tomorrow or at the latest on Friday. And just for you guys that are wondering, it's the issue I had. I don't know if anybody's ever used Camtasia, but somehow there was a glitch in the production and it unlocked. Usually when you record video, the video and audio are recorded together and they're locked together. And somehow when I saved it, at some point in there, it unlocked those two tracks. And so as I inserted like a title clip into the video that says this is going to be the CL trades, it slid the video over, but it didn't slide the audio with it. And so I get it all done and rendered, and I'm just double checking it. I always check the functionality, make sure everything's working, and I go checking it out, and it says, okay, stopped out now. And nothing happens for like 30 seconds, and then it gets stopped out. And it had separated the audio and video and slid to the side because of all those. And so then I had to go back in through the entire video and match the sound, because it won't let you relock it together. I had to go through manually and rematch the sound to the entire thing. So kind of a frustrating night, but that's the way it goes. Good thing I don't need much sleep or I'd be in serious dookie. Well, guys, I look forward to tomorrow. We'll be back in at 6:30 Pacific for me, I guess 9:30 Eastern. I don't know where everybody's at. I think we got guys all over the world in here, so we'll just call it 9:30 Eastern because everybody can kind of convert to that. Appreciate it, guys. We will talk with you tomorrow. Like I said, tomorrow we'll go through the meat of things here and really drill down into what I do as a scalper. We'll see you tomorrow morning.